much less leverage in the equity market.
We have just huge levels of debt, and we don't want to get into a debt trap.
It's clear that we are going to see downward revisions in many businesses. The question is how strong they are.
The Fed has a lot of upside to accelerate. I think they're going to maintain this pace.
The chart may call it a double dip, but it's all the same recession.
COVID is the great unequalizer. The strong get stronger, the weak gets weaker.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Tuesday morning, equity futures bouncing back a little bit, 15 on the S&P 500. Tom, we advanced 0.4%, 1 week away from wrapping up this election.
I think, John, we got to really put in perspective the carnage yesterday. We were down 5% from the peak on SPX, down 7 or 8% on NASDAQ 100. John, where we are is about where we were on Valentine's Day. Of course, John, you do remember Valentine's Day. That was pre-pandemic. So all we've really done is pull back to the pre-pandemic highs. I think we got to put some perspective in this as we saw, what was it, down 700, 800, 900 yesterday, Dow points.
I'm not sure why I'm the target of remembering Valentine's Day, but we can discuss that.
Do you really
later.
want to discuss that?
I usually do okay on Valentine's Day, Tom. It's you that I worry about.
That's true.
February 14th,
that would be true.
Because you often don't remember it.
That would be true. That would be true. Although I do remember, Lisa, a roses scenario with John a few years ago.
You're trying to bring me into this? Really, Tom?
He was amazed at roses.
I was trying to get to AMD and Xilinx and bringing it back.
AMD and Xilinx is a big deal. For those in engineering and history, this is a hugely emotional deal. John, the distance from San Jose to Santa Clara out in the Stanford Berkeley Combine, it's like 4 miles, maybe 5 miles. But Xilinx is one of the storied names coming out of Fairchild of years and years ago. And to see this merger today, 35 billion large, it really says something about the combination of all the history of the Bay Area.
$35 billion in stock and a tale of two companies in one sector. Intel, not so great at the moment, Tom, and AMD really performing. That seems to be the story in that industry at the moment.
Yeah, as you mentioned, you absolutely nail it, John. To me, and I'm speaking as an amateur here in engineering, to me, the story here is Intel really didn't play. This is AMD, a giant 11,000 employees, taking out 5,000 employees, Xilinx. But you're just dead on. The Intel that we knew 10 and 20 years ago, maybe akin to IBM, is a changed company.
Lisa, let's get to the data. 90 minutes away in the United States of America.
We could keep talking about Valentine's Day, or we could keep going with AMD.
Go to roses.
I will say, just to build on this concept of tale of two different companies within the same industry, we'll get a 30,000-foot view of business investment at 8:30 a.m. with U.S. September durable goods orders. Capital investment is a sign of confidence, and by many accounts, it has been coming down. 1 p.m., the U.S. is selling $54 billion of two-year notes. I wanted to put this on because I know that Tom follows these auctions so closely, but also because there are a series of record-breaking Treasury auctions this week, more than $150 billion of notes. And the question is, at what point the incredible supply will overwhelm the demand? So far, no sign of that. In aftermarket, we are going to be getting earnings from Microsoft, sort of trying to get a sense, in my opinion, of whether they even matter, or whether some of the big tech names that are set to report on Thursday, also Alphabet, Amazon, as well as Apple, whether they will really have to deliver, or whether it's completely an interest rate play, John.
Lisa Abramowitz, the earnings a little bit later from Microsoft, and then on Thursday, we're going to hear from who? Tom, we have Apple, Amazon, and Facebook, all Thursday afternoon.
Right.
There's a massive day coming up a little bit later.
I mean, I'm in triple leverage all cash, but I read Joe Feldman over at Telsey Advisory Group on Amazon today very carefully, John. To be blunt, he's at high end of street. He's got a 4,000 target on Amazon. Let's call it up 20% in short order. But he was extremely optimistic about not only the combination of those cardboard boxes that everybody sees in their lobby, but also he really spoke about a resilient cloud where there's other cloud challenges out there.
Stock up in the pre-market, Amazon up 0.7%, futures advancing 14 on the S&P 500. Here's the price action this Tuesday morning. We advanced 0.4%, 14 points on the S&P 500. The euro doing nothing, euro dollar 118.15. We had a break at 118 earlier, very briefly. a 117 handle. Tom was sleeping. In the bond market, 10-year yields unchanged, 0.7994% on a US 10-year. You know how this works? I introduce a guest from Morgan Stanley. They talk about a V-shaped recovery, how they were right, everyone else was wrong. Lisa will ask some questions about why they might be wrong in a month, 2 months, 3. That's the next 5 minutes right here on Bloomberg. Andrew Sliman joins us right now, Morgan Stanley Investment Management Senior Portfolio Manager. Andrew, well done. You're smiling.
Good morning.
I know. V-shaped recovery, stocks up and all that. What's the latest call right now, Andrew? How do you see the evolution of this call at the House of Morgan Stanley that's been pretty spot on for the last 6 months?
Well, you know, as a portfolio manager, I see the evolution as really the equal-weighted S&P outperforming the cap-weighted, which is namely that, as you know, up through September, the cap-weighted was massively outperforming the equal-weighted. It was massively outperforming the small-cap index, and then something happened, and that is that we're starting to see more of these economically sensitive stocks starting to pick up. So I think the evolution is that it's not so much at the market level as it pertains to cap-weighted S&P. It's more the underpinnings of the rest of the stocks in the index that have really lagged behind. I think they're starting to price some type of reopening, but they did get very overbought on a short-term basis. So things like yesterday doesn't surprise me at all that we had a retrenchment a bit.
Andrew, the goal here is to have some patience. I want you to define the character and color of patience right now. How do you counsel patience, say, out to January or February of next year?
Well, I'm counseling patience through next Tuesday, Tom, which is resist the urge to overreact to whatever happens in the election that doesn't fit your, whatever your, not you, but your political view is. Because, look, I got gray hair. I've been in this business a long time. I've seen so many people react by doing things in their financial portfolio to express their political views that never turn out to be right. So I'm trying to get people just to, look past it. But as it pertains to out to next year, there's a history of re-outbreaks of diseases in the fall after the initial outbreaks in, the winter, spring previous. And you don't get as much of a pullback in the market because it's a known risk. We knew we were going to get another reemergence. And so I don't think from a financial standpoint, it will cause the destruction that we had the first go around. And I do think the market will begin, it's still October, but the market will begin to anticipate that we will get through this at some point, that the comps, this is a very important point, the comparisons for a lot of companies that were shut down this year is going to be very, very easy next year, and the market won't sit around and wait for the reality of that to happen next year. It's going to start to anticipate that as we get later into this year. So I think we get through the election, and it doesn't really matter who's elected. The comparisons are going to be easy for a lot of these companies, and I think that's what people will focus on.
So perhaps 10 minutes ago, Andrew, I might have asked you about what happens if the vaccine isn't exactly as effective as people think, or the virus is spreading more than expected. But that would make me incredibly predictable to Jonathan Ferro, who already predicted I would ask all of those things. So instead, I will ask about, theoretically, if someone were in a triple leveraged cash fund right now, and we're looking and we're looking for an entry point, what they should be buying, how they should be arranging their portfolio in equities now for what you're expecting next year.
Well, if you say now, do you mean at this very moment? Look, I can tell you that I trimmed yesterday in our portfolio a couple of financial stocks, not the big banks, but had gone up a lot, right? I trimmed one of our emerging market stocks that had gone up a lot. I think, there's been a lot of risk on since the bottom of this little short-term pullback that happened in September. And a lot of things to me look very overbought on a short-term basis. Risk looks overbought. So it doesn't surprise me we got a pullback. And I think that's kind of a short-term play, but I still think positioning-wise, if we get further pullback, anxiety into the election, what I would say to you, take advantage to get out of that, cash position, because I think it doesn't really matter who's elected. I think the market is heading higher into next year. But again, I'm much more confident in the equal-weighted than the cap-weighted index.
So, Andrew, on November 4th, if we get any kind of negative dislocation, we know that you're a buyer.
Well, again, we knew that COVID reemergence was a known risk. We know that dislocation, that's code for contested election, that's a known risk. We didn't know in 2000 about a contested election. Bush-Gore was an unknown risk of contested election. We had an 8.6% peak to trough down pullback in that unknown risk. So I don't think this known risk, it doesn't mean we can't have a pullback, but I just don't think it's going to be as much because we're all talking about it. So the question is, what are the unknown risks that we're not talking about? What happens if the economy accelerates too fast and the Fed changes policy? What happens if, we have another Fed chair next year? I'm just throwing out things that people aren't talking about. That's what the market tends to react more negatively to.
Andrew, great to catch up, sir. Thank you. Wasn't quite as I predicted, but it was close. Andrew Slip from Morgan Stanley Investment Management. Thank you very much. I mean, Tom, we could joke about it because I always congratulate them every time they come on. The House of Morgan Stanley, Tom, over the last 6 months has been out there, constructive, positive, and they've been right. Or as Lisa would say, they've been right so far.
Well, they've been right so far. I'll go with that. But, this comes down to, for everybody listening and watching, are you linking politics directly into your investment or not? And everybody has sort of a core belief on that, John. I mean, I've learned over the years that people really, really, really link, and others don't. I mean, the research capability is extraordinary, John. I was flabbergasted that long stem roses now don't cost what they cost on February 13th of any given year.
Oh, really?
I mean, this is price theory. This is University of Chicago. It's a deep study that was done out at, I think Krosner had something to do with this. $44.98 on Amazon, and they give you a free vase.
Okay.
And, John, that is way beneath what you spend for wilted roses.
He returned those. He returned those roses, Tom. Go ahead.
I do this live on air.
You can literally move the digit. I mean, you can move the decimal point there, John, over what you got taken for in the island of Manhattan.
I think I'm short roses going into the new year.
I'm looking for an entry point.
Decipher that any which way you want. I might have been long roses. I'm most certainly short roses now. If Dave Ricks of Eli Lilly is watching, he's probably rescheduling. The CEO coming up a little bit later on Bloomberg.
With the First Word News, I'm Rishka Gupta. Amy Coney Barrett has been sworn in as a Justice of the Supreme Court. The first of two required oaths was administered not long after the Senate voted 52 to 48 to confirm her. Every Republican but one voted in favor. Chief Justice John Roberts will administer the second oath today at the court. Barrett's confirmation solidifies a 6-3 conservative majority. The record coronavirus surge that started with young Americans has now reached the oldest populations. According to the CDC, counties with the largest 65 and older populations now have an average 19 daily cases per 100,000 residents. That's 67% higher than a month ago. China ramped up its purchases of American goods last month. Still, it's far from the full-year target set out under Phase 1 of the trade deal with the U.S. The Chinese bought more American soil, soybeans, and cars. With 3 months to go in the year, Beijing is in a little more than a third of the way towards the goal of $170 billion in U.S. imports. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The job of a judge to resist her policy preferences. It would be a dereliction of duty for her to give in to them. Federal judges don't stand for election. Thus, they have no basis for claiming that their preferences reflect those of the people.
Amy Coney Barrett, Supreme Court Justice from New York and London this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Looking at the markets this morning, this Tuesday morning, we bounced back a little bit on the S&P 500, up 13. As the session grows older, things improve a little bit more, up 0.4%. Nicely through 3,400. In the FX market, the euro, a break of 118 earlier, lower, a 117 handle. In the last hour, we pick up again, 118.18 on euro dollar. And in the bond market, this is where we stay, south of 80 basis points. A sell-off last week, 10 basis points higher on a 10-year yield, and then we come back down again yesterday, and the bid sticks, Tom Keene. Yields unchanged on the session.
Yeah, I thought it was really non-correlated. I got a phone call about 4 p.m. yesterday, maybe 5 p.m., John, after the surveillance nap, and I really saw an uncorrelated market. I saw equities pull back, and that was about it. You know, we'll see. Look at the 10-year, 0.80%. What we're doing with Kevin Cirilli is a lot on the immediate politics. With the video that we just saw of Justice Barrett, I thought, Kevin, I'd wander through the ages here. 48, 53, 55, 65, 66. Justice Kagan, is 60. And then we get to those older. Clarence Thomas, 72, and Justice Breyer is 82 years old. Is there any assumption here, Kevin, that a Biden presidency brings a court back towards neutrality? Or do you put some weight in this raging debate about stacking the court?
You know, it's a great point, because I think right now in these times we essentially had always been used to traditionally conservative or liberal Supreme Court judges, and so I think now, though, there's almost 3 camps on the Supreme Court. You've got the left, the right, and the middle is really going to be what moves the needle on incredibly important cases.
Who is the middle? Who is the Anthony Kennedy right now?
I think that depends on who you ask, but I think to some extent you could argue anything I say. I think there are some scholars who would suggest someone like a Gorsuch is more to the middle right now and is an incredibly important vote. But on the Affordable Care Act case that's coming up in the week following the election, I think then we're really going to have a new understanding of the makeup of the court. But that image, if you're looking at it on the front pages of your newspapers this morning, or if you're watching via television right now, to see the president with an African-American Supreme Court justice, and of course Amy Coney Barrett as a female, that's the image in 1 week from an election that Republicans are hoping will carry the swing vote or push turnout in suburbs and remind Republicans who are very apprehensive of the president's rhetoric, of the president's approach to politics, in terms of what he is capable of delivering. It's a calculation, but it's an image that Republicans feel is something that, quite honestly, is probably more beneficial to them than that first presidential debate.
I look, Kevin, at the moment that we're in. Does any of the talk you just had play into the election? To me, they're two discrete things. Am I right?
Well, I don't know, Tom, because I think when you can't look at any of this through a vacuum, and I think if you look at the latest polls, which show Florida with a neck-and-neck, razor-thin toss-up state, a key battleground state, if you look at how Democrats are looking to expand the map, they're looking to finally turn Texas blue. You look at what's going on in the Carolinas. I don't think we have any really good idea yet in terms of what's going to happen. The president's going to be bulldozing through battleground states, holding 3 rallies yesterday in battleground state of Pennsylvania. He's going to be holding up to 6 rallies a day. This is the same playbook that he used back in 2016. Joe Biden taking a much different approach, trying to be much more consistent in terms of his messaging. He feels that less is more. According to the sources that I talk with on the Biden re-election campaign, they feel that they're in a strong position. However, they're still anxious to have a repeat of 2016.
I keep bringing this up, Kevin. I get it's the strategy. Keep the spotlight on the president. The one thing he doesn't want to talk about, COVID. It's the one thing everybody's still talking about. But in the final week of campaigning, don't you think the former VP needs to be a little bit more visible?
You know, I think it's a great point, Jonathan, and I think whenever the results of this election are determined, I think that they will either be called political masterminds or they will be called that they fumbled a massive political campaign. And I just think it's the risk that they are taking, but it is without question a massive political risk. I mean, you couldn't have more of two contrasting candidates, and I'm not talking about President Trump. I'm talking about Vice Presidential nominee Kamala Harris and Democratic presidential nominee Joe Biden, in terms of just how much you've got Harris, who loves being on the campaign trail, loves campaigning, wants to be out there, and Joe Biden, who has taken a much different approach. It is, I think, his legacy in his decades-long career as a politician, who he is now as a politician is not who he was, in the sense that he's not that retail politician that we saw, for decades, Lisa.
Kevin, in the meantime, senators all went home. We were talking about talks about fiscal support. We are no longer talking about talks about fiscal support. Everyone's just going home. What gives?
Well, you know, yesterday I was on Capitol Hill and I spoke with Senator Kevin Cramer. He's a Republican from North Dakota, and he said, Kev, I always said lame duck session is when the stimulus is going to happen. I rolled my eyes. I said, Senator, you folks were a little more optimistic in the drum up. But look, I mean, he actually made a key point here that I think if you're outside of Washington or you're waking up this morning and you're trying to figure out or price in where the fiscal stimulus is headed, he said the election, get this, the election results will inform not the first quarter negotiations, Lisa, but the lame duck negotiations. So that's a fascinating nuance in terms of how the fiscal stimulus could be informed of who has leverage in the month of December when there is stimulus. And if it's Republicans, it's going to be a much smaller price tag. But even if it's Democrats, I think that they would be willing to pass a short-term, a smaller deal, and then if Biden wins, pass a massive amount in the first quarter of next year.
I think we're all waiting for the fiscal hawks to come out of hibernation all over again, potentially.
2022.
Kevin, great to catch up.
Oh, can't wait.
Kevin Cirilli, Bloomberg Chief Washington correspondent. Got a little feel for Kevin's life on Capitol Hill then. He walks around and they just shout out, hey, Kev. Hey, Kev. We don't even call him Kev. Tom, what is this? Hey, Kev.
I was walking with him. This is before all the uproar that we saw at Lafayette Park, but I was walking with Mr. Cirilli across Lafayette Park a number of months ago. And it's on the edge of worship, John. I mean, you know, there's you got to be careful. It's on the edge of worship on the streets of the Northwest Quadrant.
I bet it is. More of that still to come. A week away from a general election.
I almost sent him a dozen roses, but I didn't.
Oh my God.
Do you want to do that again?
Really?
Do you want to do that again? Come on.
Hey, I'm happy the Tots won. It was spine tingling.
That's the good news.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
From London and New York, good morning to you all. Alongside Tom Keene and Lisa Rabitz, I'm Jonathan Ferro. Tuesday morning, 2 hours away from the opening bell. Here's the price action. The S&P 500 bouncing back a little bit from yesterday's losses. Up 15, we advanced 0.4%. The bond bid sticks, though. Not a reversal. No reversal of yesterday's move. Yields unchanged on a 10-year, just south of 80 basis points. And in foreign exchange, the euro briefly with a 117 handle, back up to about 118.20. That's the story of the market. The S&P 500 posting its biggest drop in a month as rising coronavirus concerns spread globally. Brian Nick of Nuveen says the lack of fiscal stimulus is weighing heavily on the market outlook.
Those programs have all been expired, and there's not really a promise for any replacement until perhaps the middle of the first quarter of next year. And so what we're seeing, I think, is at least a pause by markets as they kind of evaluate what this is going to mean for earnings and for the economy as a whole in the fourth quarter.
That's the take of Brian Nick. Here's the take of Chris Watling of Longview Economics writing the following. The update on the monthly U.S. household cash flow model and the latest money supply data support the contention that further stimulus isn't necessary. What's needed is a vaccine. That would release the full effects of the stimulus. Tom Keene, that is a take that Chris Watling doesn't just hold alone. That's a take that many people share with him.
Yeah, there's no question about it. It really goes back to really the foundation of Longview Economics out of Cazenove. Chris Watling really talking about old normal. I love that idea, Chris Watling, of pushing against the PIMCO religion of new normal. What is a Watling old normal, and what does it mean forward?
Well, I mean, the old normal is I mean, if you like, it's kind of what goes around comes around. And the thing I like about economic theory is it changes all the time, and people get stuck on one theory. But the reality is the world changes, and you need to use a different theory to sort of address it, which is kind of what we're thinking about in the old normal, going back to where you were. But I mean, what it means here is that it's amazing how much cash has amassed on balance sheets. And in some ways it's amazing, in some ways it isn't. Of course, we've had an enormous cash transfer from the government sector to the household sector globally. I mean, it's been biggest in the States where, of course, you've had the extra $1,200 checks. But in terms of the old normal, I mean, we're going back to that theory of helicopter money. It's clearly at play, isn't it? And as a result, you've got Americans with over $2 trillion now of sort of extra cash on their balance sheets, which is really quite something.
Well, your research notes extraordinary on that, whether it goes back to M1, M2, and the theories of old or not. We're up to our eyeballs in cash. What will be the catalyst for someone to find comfort to put that to work?
Well, this is why I think the biggest stimulus really is the vaccine. And the vaccine, of course, I liken it to throwing the match onto the kerosene. And the stimulus is the kerosene. It's already sitting there. It's waiting for that match to hit it. And of course, once you get the vaccine, you begin the normalization of spending process, and all the sort of wealthy baby boomers who are retired or semi-retired, and the high-income workers who may have been sheltering. All these people come out and start spending that cash they've been saving, and get the economy going and returning to normal.
Chris, a lot of people agree with you. I am sitting here listening to you. We're all waiting for a vaccine. The question is, what do you do in the meantime as millions of people lose their jobs and don't have any income, and the tourism industry is dead, and you end up with this situation where people can't be employed because there are many industries simply shut down because there is not a vaccine yet, and there may not be one in distribution form that's effective until the end of next year, even in mass. So what do you do until then? Do you just sort of wait and see how long these cash balances can sustain households?
Well, I mean, it depends on your view of when the vaccine's coming, and the judgment on that's important. If the American administration's plan is truly enacted, and you get a vaccine in the next month or two, then by April next year, everyone will be vaccinated. So whether or not you believe that's important, if you do, then maybe you can hold on. If you don't, and you think it takes longer, then sure, you may want to bridge that gap. But there's a short-term versus long-term playoff here, isn't there? I mean, there's some real issues. I know people talk about long-term unemployment and issues there, but I think there are also issues of spending in the short term and having some fiscal challenges in the medium to long term. And I think those need to be considered as well in the mix. So personally, I mean, I'm an optimist, so I think so much money's been thrown at this health problem. There's every chance we're going to get a vaccine, and lots of good noises out there as well from all sorts of healthcare CEOs and so on. So I would think it's almost worth holding on and pushing on through for the next few months, but that's political judgment, of course.
Well, Chris, let's develop this conversation just a little bit more. I don't think cash levels at the aggregate level are reason alone to say we don't need a fiscal stimulus plan. If you looked at the lower income groups that don't have those savings, but they do have a higher marginal propensity to spend, let me get my words out, Chris, if we get the money into the hands of the lower income groups, then you've got some real stimulus, don't you?
Yeah, sure. I mean, if you look at the low income versus the high income, the low income's already basically spending back where it was, if you like, if they've got the money, back where it was from earlier this year, of course, because as you say, they have to spend. They have to pay the bills, and it's money in, money out. So absolutely, much higher marginal propensity to spend, and will be helpful in that respect. But once it's spent, it's gone, and it's on the it's on the fiscal deficit side and the fiscal debt side. So it depends how you want to go about things. I mean, the more you do helicopter money and build up government debt and effectively pay for it with newly created money, the more you risk medium-term inflation. So there are trade-offs, and I just think there's not a balanced conversation. You need a balanced conversation about all the different trade-offs that are out there, and and a better strategy.
Well, let's have that now. Let's do that now. 10-year yields right now are about 80 basis points. What's the trade-off?
Well, the trade-off is, let's take up Dalio's thesis of the three phases of monetary policy in a debt super cycle, and we're into phase 3. We're into helicopter money. So the trade-off is, yes, it looks cheap at the moment, but I think we're going to get the return of monetary inflation, one of the old normals, if you like. And it feels quite a lot like the late 60s, early 70s. Not that I personally remember it terribly well, but, fiscal policy to get unemployment down, and no consequences and concerns about the monetary growth that's out there. So, then you get a potential of a repeat of the 70s, you get higher above average inflation, and you get the trade-off there in terms of real growth versus inflation in nominal GDP. So, and lower productivity growth as well. So there's a trade-off, and I don't think bond yields are pinned here for long. I mean, I think bond yields is probably the great short out there. And if you get this vaccine, I'm pretty convinced that's a great way to make money, whether it's 30 or 10 years, or even pricing in a bit of a rate hike on the 3 or 4 year Fed funds or bond yields. So, I think if we're going to get this economic boom next year, which I think is perfectly plausible, and you'll get the return of monetary inflation, bond yields at 81 are a screaming sell.
Chris, a really bold call right now, especially when you have the large houses looking at bonds and seeing perhaps they could sell off a little bit, yields could rise a bit, but not all that much, which brings me to a question about what you think monetary policy will and should be. In other words, will the Fed be willing to expand its balance sheet and buy more treasuries in order to suppress bond yields going forward in order to prevent that, even if inflation increases, leading to further negative real yields? Do you think that is an acceptable proposal or a good kind of stimulus going forward to help the economic recovery?
I suspect what we'll have is the Fed. It depends on the shape of the growth, and that in part depends on the shape, how the vaccine comes, and the shape of the pandemic, if you like. So, if it's my scenario that we expect that strong economic growth and a bit of a boom feel to it, then I think the Fed will be starting to back away from its stimulus, maybe 12, 18, 24 months down the road, but certainly doing that rather than engaging in yield curve control, because growth will look good and healthy, and they won't feel the need to do that,
right.
and they won't want to sort of stoke up financial markets even more with more liquidity.
Right.
But to be honest, if I'm wrong and it's pandemic continues, then sure, I think there's every reason you'll get yield curve control.
Chris, one final question, which alludes to, as you mentioned, to the 60s inflation, and I'm going to call it Walter Heller inflation, so identified there, Robert Samuelson with his wonderful book on the 60s and inflation. So far, the inflation east to crew has been wrong. What's different this time?
Yeah, good question. I mean, yeah, absolutely. It's 10 years of wrong forecasts, isn't it? I would say the demographics is what's different. I mean, monetary inflation needs two things. It means high money stock, and it needs money velocity. And the best correlation and driver of money velocity we find out there, it's really the growth in the working age population, in particular the younger part of that, the 20 to 40-year-olds. And, these guys are starting to grow as of this year. The baby boomers dominated 10 years ago, and they were savers then and into retirement. They're now sort of in retirement or moving in. And the more dominant age group in the States is the millennials, and they're starting to get household formation, starting to have babies and so on. My sort of off-the-cuff prediction is I think we're going to have a baby boom next year. It seems to be the most logical outcome of a lockdown. That age group is growing. Money velocity should start to accelerate. And that should give you the full monetary inflation equation, if you like, along with very high money stock, which is obviously already there. So that
Chris,
to me is what's
great
different.
To catch up. Hey, Chris, always appreciate your insight. It's great perspective. Come back soon, Chris. Seriously, Chris Walling there of Longview Economics. Potentially Tom Keene, another baby boom on the horizon worldwide.
Well, we will see. I don't know about that, but it's a really, really contentious theory that we just heard there, and it's good that we do that. We try to do all the different theories that are out there linking in economics to finance and investment. John, I'll tell you, it has been, as Mr. Watling mentioned, it has been a long 10 years for those worried about forms of money growth, those worried about debt and deficit increase. They just haven't seen yields come along.
No, not at all. We see that this morning again. I do think the point on demographics is a really important one, Tom. We've got serious demographics issues across much of Europe, well known in Japan, China, also here in the United States as well.
Well, Russell Shorto, John, is the expert on that. His one-volume history of New York City, but also his demographic study of Italy leading the way in Europe towards a lesser demographics. That really folds right into nominal GDP.
Coming up on this program, I'm pleased to say I can confirm he's still going to be on this program. Dave Riggs, Eli Lilly, CEO, will be joining us very
sent him roses
shortly. Did you? Did you? Okay. I feel like we're going to do this every segment. Which is
segment.
Okay.
Yeah.
Yep.
It's either that or the tots. Keep it up.
Hour.
Which do you prefer?
Up 15. We advanced 0.4%. No one's going to understand why we're talking about roses.
Any of this, really?
On October 27th.
Because they're cheaper. $44.92, free vase.
Okay.
What's different?
Entry level, rotate out of cash, all that. All right. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. It's a big win for President Trump and congressional Republicans in the final week of the election campaign. The Senate confirmed Amy Coney Barrett to be the newest justice on the Supreme Court. That solidifies a 6-3 conservative majority. Barrett may be asked to weigh in on cases that could determine the outcome of a close election. The paused clinical trial of an Eli Lilly experimental antibody therapy won't resume. Federal researchers concluded the drug probably wouldn't help hospitalized coronavirus patients with advanced cases. Still, other trials are ongoing to see if the Lilly drug helps patients earlier in the disease's course. The company's CEO joins Bloomberg Surveillance in just a moment. A labor union is suing President Trump over an executive order that makes it easier to fire federal workers involved in policy-making decisions. The National Treasury Employees Union represents 150,000 federal workers. Critics say the order is a way for the president to require political loyalty from civil service workers. And it's a bright spot in a cloudy U.S. labor market. Warehouse operators across the country are rushing to hire workers in the midst of that boom in online sales. Overall employment in the U.S. is still nearly 11 million below pre-virus levels, but the number of people working in the warehousing and storage industry has actually risen by 46,000 since February. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
I understand there's a huge I think, allure of rushing out with a vaccine. But the other thing we have to remember is when we go too fast, we can also disrupt the ability of clinical trials to occur for even better vaccines down the line. So we've got to strike this balance of making sure that we don't undermine the larger scale effort in our rush to get something out.
Really enjoyed the conversation earlier this morning with Vas Narasimhan, Novartis CEO, from London and New York this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Equity shaping up as follows this morning. This Tuesday, we bounced back a little bit from yesterday's losses. Biggest one-day loss on the S&P going back to late September. The S&P 500 this morning up about 0.5%. The euro firmer by a little more than 0.1%. Euro dollar 118.25, and Treasuries unchanged in and around 80 basis points, Tom, on a 10-year.
Very good. Right now, and this is a joy, as we consider this terrible pandemic, and all of us at Bloomberg Surveillance have done everything we can to bring you experts. David Ricks is out of Purdue. He runs a shop called Eli Lilly in his Indiana, and they are dominant in our history of finding solutions, whether it's insulin, erythromycin, and particularly what Lilly did on polio vaccine in 1955 was absolutely original, absolutely historic. The phrase from that time is safe, effective, and potent. That is the great hope right now for all of us. Dave Ricks, how close are we to safe, effective, and potent?
Well, thanks for having me on. It's obviously a time when the importance of our scientists' work is at a high. As you mentioned, back to our days with the polio vaccine, that's really in our blood here at Lilly, is to respond to these public health crises. We're working on the medicine side, and I think we are close to understanding that treatment with monoclonal antibodies, which we're making, and others are, early in the disease can make a significant difference. We announced data earlier in October regarding that, and we've got an application at the FDA reviewing that very data.
Which therapy has the best outcome where we can say we have a vaccine? Peter Hotez at Baylor Medicine is saying simply we need something cheap and old school. John spoke with Novartis this morning. There's Moderna, all the rest of them. Which is the approach, Mr. Ricks, that seems to be the one that will get us to a societal vaccine?
Well, I think on the vaccine side, the good news is there's lots of approaches being tried.
Yes.
You know, in our business, we need data. I don't think it makes sense to guess at which would be the most effective. The good news is we'll know that, and we'll know that pretty soon. The early ones, as you pointed out, are the mRNA a new technology that's never produced a human vaccine before, but looks pretty promising in terms of the ability to generate our own antibody response, and that's a good sign, I think, for defeating the virus or preventing infectious spread. We don't know how long that will last. There's other approaches that have produced vaccines, modified virus, taking different viruses and mounting elements of the COVID virus on them, and those are more proven. They're a little harder to scale, but they also may produce a good response. Mostly, I'm confident because we have so many shots on goal, really an unprecedented number so quickly.
Yeah.
So I think science will win in the end. It's just hard to pick the winner at this point in the horse race.
John, that's a hockey phrase there. That's not a soccer phrase because there's so few shots on goal.
It might be a soccer phrase.
In soccer. That's a hockey phrase there from Mr.
You
Ricks.
don't know what Dave meant. I'm just going to interpret it as a soccer phrase. It still makes sense.
Okay,
Dave,
thank you.
You mentioned the word scale, and I want to return to antibody therapies, and please help me understand how difficult it is to scale something up quickly in large amounts as soon as you get the green light.
Yeah, it's difficult. Because it's so difficult, we actually started commercial manufacturing in the first week in July. So we had to basically aim at a target that hadn't arrived at its point yet. We didn't know the dose. We didn't know whether the drug could work. We didn't know in which setting it would work. And today, or yesterday, we announced a study we'd been conducting with the NIH. We're going to pause because it's in a later stage of the disease where probably these antibodies won't be as effective. Whereas in early stage of the disease, looks highly effective. So we already started that process. It's about 4 months from beginning to end, best case, to start manufacturing and have output. And then on top of all that, the global infrastructure to make monoclonal antibodies, which are some of the most complicated and expensive type of medicines to make, is limited. We've harnessed actually 5 different sites within our network, collaborating with Amgen and working with a large contract manufacturer owned by Samsung, actually, in Korea, to sequester a significant amount of volume. Even then, we know it won't be enough for all the needs based on the current infection rates. So we need to work on lower doses and then concentrating these important therapies where they can make the biggest impact. For us right now, we think that's high-risk patients right as they're diagnosed.
Rick, there's also Dave, excuse me. There's also a question of profitability, and your latest earnings report, which just came out, said that you expect to spend $400 million on COVID therapies, exploring what could potentially work. And there's a natural cap to whatever you can charge for these remedies because there is a public health need and benefit right now. How profitable can these therapies actually be based on the human interest here?
Yeah, so today we announced earnings. It's a good point. That's why I'm on, which showed another solid quarter. We grew revenue and profit amidst this pandemic we're in. And really, I think it shows the resilience of a company like ours. As we think about pricing and access, our first priority is that patients pay nothing. We know that if there's an out-of-pocket costs, that economics will start to differentiate who gets the drug. And we think that health status should be the only factor considered. So we're working with governments to procure and sell our medicines and distribute within their markets. In terms of pricing, what we're thinking about carefully is to create a price that immediately creates value, not just for us, but for the system, meaning it saves money, direct costs very quickly. And we've demonstrated we can reduce hospitalization risk in high-risk patients between 70 and 80%. In the U.S., a hospitalization stay for COVID is about $22,000 per person. So there's ample room to share that value, assuming the drug is approved. So we're working on the exact price. It won't be as profitable as other products, certainly. We expect to have a modest return for shareholders based on our modeling today. But I think companies like ours, we're built for moments like this. Our job is to invest at risk, use our science to solve tough problems, and there's a tough problem at hand right now, and that's why we're applying ourselves to it.
Dave, I think I speak for us all when I say good luck for the year ahead, that's for sure. Dave Ricks, appreciate the time this morning, sir. Thank you. Eli Lilly, Chairman and CEO. Tom, I think it's fascinating just on terms of the approval. You can't wait for the approval. You've got to scale this thing up. months ago. And that's exactly what we've been doing.
What we've done on this, John, I think is really important. This is incredibly more difficult than the lightness of the punditry that is out there. And whether it's the Imperial College in London or what Hotez is doing at Baylor and on and on and on, what you did with Novartis, this is really, really difficult science.
And the industry is working really, really hard to find a solution. Coming up on this program, Lee Ferridge, State Street Head of Macro Strategy from London and New York this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Equity futures near session highs. We're up 16. We advance 0.5%. 1 week to go until we wrap up this election. This is Bloomberg.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
What would you say that the CDC or the FDA or the White House or HHS should have done differently?
Almost all of us have underestimated the dramatic impact of this outbreak.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
much less leverage in the equity market.
We have just huge levels of debt, and we don't want to get into a debt trap.
It's clear that we are going to see downward revisions in many businesses. The question is how strong they are.
The Fed has a lot of upside to accelerate. I think they're going to maintain this pace.
The chart may call it a double dip, but it's all the same recession.
COVID is the great unequalizer. The strong get stronger, the weak gets weaker.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene, Bloomberg Surveillance. We are on radio, coast to coast and worldwide, and television as well. A bit of a fog and rain in New York. Maybe there's a fog towards the election 7 days on. Jonathan Ferro, after the carnage that we saw yesterday, we really have to recalibrate where we are because we advanced so nicely before yesterday. It really isn't all that much of a pullback technically, is it?
Well, let's be clear on the distinction with the bounce back first, Tom. The S&P 500 might be bouncing back by about 0.5%. Europe is not at all. Europe is still lower. And I think Europe is where the problem is at the moment. Not just the caseload, but also the restrictions around the continent too. Europe has a problem. I keep talking about this. I keep going back to it. There is a real issue in the European economy. The recovery had already lost momentum. It's stalling. And then you throw this on top, Tom. It's October 27th. It's not November. It's not December. Doesn't look good.
It is October 27th, John, and that gets us to an ECB meeting, not with the pullback yesterday, which, you know, S&P down 5% from peak, NASDAQ 100 down 7-8% from peak, and his futures up 15. But, John, the degrees of freedom that Christine Lagarde has get ever more narrow, don't they?
You remember 6 months ago, I'm not here to close spreads. That's their job right now. Just keep a lid on it. Keep a lid on financial conditions. Keep them loose, loose, loose. Right now, what I find fascinating, and Guy and I went back and forth on this yesterday, like yesterday evening, if you asked people whether we had some fiscal stimulus at the European level, I think they would say we do. We had a deal, but that deal hasn't been ratified and that money hasn't been dispersed. That's the problem in Europe right now. We're still staring at the ECB. They haven't got it done at the European level yet. They had an agreement, Tom, but that agreement hasn't been ratified in national parliaments, and that money hasn't left the door and might not for several months.
And Lisa, Christopher Rowan, publishing moments ago at Strategas, points out what you've said, which is, we saw some equity fire yesterday, but really not that much, Lisa, on the bond side as well. What did you observe in bonds from, say, yesterday afternoon, 3 p.m.-ish, on forward to right now?
Well, the interesting thing is people who are declaring the death of the 60-40 portfolio were wrong over the past few days. The equity volatility has been met with more buying of treasuries, albeit not that much and not that significant of a yield move. But it raises this issue, the uncertainty, the fog that you're talking about, is not only around the election, it's around where the bigger risk lies, that treasury yields will go up very quickly or that they will shrink very rapidly with disinflationary tendencies. The fog of uncertainty is palpable, Tom, about everything from the election to just the fundamental economy and the permanent joblessness that we may see.
We've got a wonderful guest here in moments with a real quantitative bent to him, but right now looking at the data, futures up 16, as John mentions, Dow futures up 98. The VIX comes in 0.39 points. That's important. VIX 28 through 30 about 24 hours ago, and then up to 32-ish on the brink of 33, 32.08 right now. The VIX coming in nicely. Yield doesn't do anything, 0.80% to Lisa's point. The dollar index, well, you know, stronger now, weaker. I don't know. John mentions a euro resilient, 118.30. I do want to point out Turkish lira with a second grim day, no other way to put it, out to 8.16. On lira, 8.15 right now. On Turkish lira, that's a 16% depreciation since the middle of the summer. Lee Farage is different. With an acclaimed career at Commerce Bank and then for almost a decade at Rabobank, he holds court in Boston. At State Street Bank is head of their macro strategy, and Lee Farage brings there a terrific quantitative bent. Lee, I want to go to the quant right now and the quantitative belief out to 2021. What is the position as you try to hedge your bet out? Are you able to hedge right now?
In terms of the outlook, you can. I mean, you know, the market is, I would say the market is very neutrally positioned ahead of the election. A lot of people think a blue wave is priced in. It's not. If you look across a range of different indicators, blue wave isn't priced in. The market is nervous about a repeat of 2016. They're skeptical about the polls, and people are really sitting on their hands.
Well, Lee, let's talk about where it's not priced in. Where do you think it's not priced in?
I don't think it's priced in anywhere, quite honestly. In terms of the dollar, we see positioning in the dollar generally is underweight, but I think there's a view amongst many, which I agree with, that the dollar is going to go down whoever wins the election. Equities, yes, you can argue there's some overweight positioning in equities, but again, I think the view is we're going to get more policy stimulus, so equities probably go up whoever wins. The barometer for me I'm looking at most of all is probably EM. And a lot of people, most investors are very neutrally positioned in EM. And EM's really the sort of swing variable on the election. If we get the blue wave, very positive for emerging markets. If we get, Biden with a split Congress or Trump with a split Congress, then that's a much more tricky environment for EM. So I would look at EM positioning as a guide to the market positioning. And for me, that's neutral.
Well, Lee, let's just go back a couple of steps. Stocks go up, whoever wins. The dollar goes down, whoever wins. Why, Lee?
Well, I mean, I think, in terms of the dollar, it's about the Fed primarily. And it's about actually foreign investors' ability to hedge their treasury purchases, right? So the U.S. runs a significant current account deficit. They fund that through bond purchases. Well, if foreign investors can hedge those bond purchases, the dollar goes down. And right now they can, because the Fed's not offering any short-term rate premium. The curve is relatively steep. Sounds ridiculous with 80 basis points 10-year yields, but the curve is relatively steep. So therefore, foreigners can hedge their treasury purchases. The dollar goes down. Whoever wins the election, that's not going to change. The Fed's not going to be hiking rates for the next 3-4 years. Whoever wins the election. You can argue on a blue wave it probably goes down faster, because we get the fiscal stimulus, which probably increases the current account deficit. But either way, the dollar goes down, whatever the election outcome.
Lee, what's the threshold for the Fed easing further?
Oh, it's a very good question. The trigger, if anything, would be yields. If we see yields start to back up, I think the Fed will be fearful of that. So that would mean that they would ease further to control yields. I know they don't have yield curve control as a policy, but they don't want to see higher yields. So again, if you get the blue wave, talk of huge fiscal stimulus, if we see yields back up, then the Fed could restart or re-expand QE to hold yields down. So I think that's a big trigger. But even without that, listen, we have this shiny new framework.
Yeah,
we have average inflation targeting. We have maximum employment rather than full employment. On their own forecasts back in September, they don't achieve either of those targets in the next 3 years on their own forecasts. So I think the Fed's going to ease further anyway. Otherwise, what's the point of switching the framework? You switch the framework to these new mandates, you don't achieve them on your own forecasts, and you do nothing about it. I think the Fed are going to ease policy further anyway.
Lee, I love that. I thought it was the third album of REO Speedwagon, this shiny new framework. Let's go with it. Right now we have a shiny new framework, and we don't know what it's going to be or what it is. How do you invest given this shiny new framework?
Listen, it's very hard because policy is very loose. That is going to support asset prices generally. But valuations are hard. Valuations are really tricky. And we've seen this dollar debasement consistently over the last 4 or 5 months. First it was gold, and we got to $2,000, and then it was tech stocks, and we got huge valuations there. Then it was the euro to an extent. We got to 120, and everyone got nosebleeds and started worrying about the ECB. It's tough. Listen, if we get the blue wave, as I mentioned before, I think emerging markets could have a fantastic 2021. You'll have a weakening dollar. You'll have a big infrastructure spending plan. You'll have huge fiscal stimulus in the U.S. You could have a fantastic 2021 for emerging markets. FX, equities, fixed income.
Yeah.
If you get the sort of split Congress and president and White House, it's much harder, and I think the environment becomes much harder for investors. Policy is going to stay loose. That's going to support asset prices probably, but the volatility in the sideways market we've seen since August, because the S&P is at the same level now as it was in mid-August. As you mentioned earlier, Europe is actually Euro stocks are the lowest since June. those sort of more sideways markets will be the result if we have split White House and Congress, and investing is much harder. If you get the blue wave, EM is where I would be.
Hey, Lee, come back soon. Would love to catch up, maybe on November 4th. Lee Ferridge there of State Street. Thank you, sir. Equities bouncing back. One stock to watch ahead of the open. AMC out with some news in the last 10 minutes or so. That stock up in the pre-market by about 5.5%. AMC saying that several AMC locations in Northern California, San Francisco, the Greater Bay Area, will resume operations beginning Friday, October 30th, Tom. That news just breaking. The stock up by about 5.5% in early trading.
Yeah, it has been challenging. I mean, I'm looking at the chart here. Now, you know, you said AMC, and I thought you were going to AMD off of Xilinx, so you're confusing me, John.
No.
I mean, you know, it's like...
We can do that later.
It's like work here, but, you know, I'm trying to get back...
The place you would watch a movie at, Tom.
Really? Well, you know, when was the last time I went to the movies? I mean, you know, they're back almost to pandemic lows of March and April right now. I mean, basically they went 7 down to 2. And I guess they've come back a little bit. I mean, that's all there is to it, right?
Well, I know, Lisa, you've been following the debt story as well. This has been one of the candidates that people have been a little bit worried about in the last month.
Frankly, the fact that the shares are up this much in pre-market trading on the news that they're just reopening theaters indicates how low the bar is, John. That's all I can say.
Exceptionally low for this industry. It's tough. Coming up, Tina Fordham of Avonhurst Advisory Services weighing in on this election. You might not have heard, it is 7 days away from wrapping up. We might have a result November 4th. We might, being the issue for this market, because maybe we won't.
It could go on as long as Brexit.
Up 0.4%. What, 4.5 years?
Yeah, you know.
I hope not. You hope not too. This is Bloomberg.
Has been sworn in as a justice of the Supreme Court. The first of 2 required oaths was administered not long after the Senate voted 52 to 48 to confirm her. Every Republican but one voted in favor. Chief Justice John Roberts will administer the second oath today at the court. Barrett's confirmation solidifies a 6-3 conservative majority. The record coronavirus surge that started with young Americans has now reached the oldest populations. And according to the CDC, counties with the largest 65 and older populations now have an average 19 daily cases per 100,000 residents. That's 67% higher than a month ago. China ramped up its purchases of American goods last month. Still, it's far from the full-year target set out under Phase 1 of the trade deal with the U.S. The Chinese bought more American oil, soybeans, and cars. With 3 months to go in the year, Beijing is a little more than a third of the way towards the goal of $170 billion in U.S. imports. And in the UK, Prime Minister Boris Johnson faces a revolt from more than 50 of his own Conservative members of Parliament. They're demanding a clear route out of lockdown for parts of northern Britain that helped give him a majority in the last election. The lawmakers told Johnson his strategy of targeting local areas with restrictions was disproportionately damaging the economies of northern regions. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
We have the best testing in the world. That's why we show so many cases, because we do more testing than anybody else. But we're doing great, and, excuse me, here I am, right? I'm here too.
The bottom line is, Donald Trump is the worst possible president, the worst possible person to try to lead us through this pandemic. And I don't think he just either doesn't have any idea what to do, or he just doesn't care.
President Trump and Vice President Biden continuing to rally yesterday with 1 week of campaigning still to go. From London and New York this morning, good morning. 1 hour and 12 minutes away from the opening bell alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures up, positive on the S&P 500, up 14. We advanced 0.4%. We talked a lot about the weakness in Europe. Euro resilience still the story, though, 118.30. And in the bond market, just muted price action here after yesterday's rally. 79 basis points on a 10-year, Tom.
Yeah, muted is the right word. I like that for where we are right now, and we'll just watch it here amid all this uncertainty. Of course, part of that is a domestic uncertainty. Part of that is the science we've been talking about, particularly with David Ricks of Lilly. But also there is the international policy uncertainty. Tina Fordham studies this at Avonhurst Advisory Services. We're thrilled she could be with us with really thoughtful synthesis here of tying this all together. What does the State Department look like, Tina, with a Biden victory?
Well, it might have some people back in it again, Tom. The State Department was famously hollowed out during the Trump administration, and the conduct of U.S. foreign policy really was coming, more from the White House. We have a lot of demoralized U.S. diplomats around, and so I think what the broad expectation of a Biden presidency, as unexciting as it sounds, would be a return to the kind of conduct of U.S. foreign policy that we've become used to globally, regardless of whether there's a Republican or a Democrat in the White House.
Second terms are always different. And, with no disrespect to Mr. Trump, it seems all second terms enter jubilant and become exhausted more rapidly. Would you suggest a changed foreign policy in a second term Trump, or just simply more of the same?
So as you say, one of the facts about being a second-term U.S. president is you're a lame duck on the first day, right? You're not going to be reelected from there. I would would say not enough time has been spent thinking about what a second-term foreign policy might look like under President Trump. But one thing that I think investors can count on is the continuation of tough rhetoric toward China. And in fact, that stands even if you have Joe Biden in the White House. So U.S.-China trade tensions would remain strong. I think you will see foreign powers actually test a second Trump terms for policy, right? By perhaps being a bit more assertive. We're starting to see this in Turkey from President Erdogan, for example. Who else might want to test the resolve of President Trump or an incoming President Biden? It's a good time in many ways to see if the U.S. is willing to honor its agreements.
Tina, it's hard to look out past the next 7 days. There is still so much uncertainty about how this election process will unfold in the weeks, months afterwards. Among Democrats, there is a persistent fear of a 2016 redux, Hillary Clinton leading in polls, people predicting that she had an incredibly good chance of beating now President Trump, and Clinton sort of taking a back seat and not campaigning as robustly in certain key swing states. Now Joe Biden doing something similar. Is this 2016 all over again?
Well, Democrats will certainly hope not, for many reasons. First of all, Hillary's polling lead actually narrowed in the final 2 weeks, which is something that we're not seeing yet with Joe Biden. His lead has been pretty consistent, so he has that on his side. Other factors, of course, that make this time different is far fewer undecided voters. People have been clear much earlier on in the race than we're used to in U.S. elections, and we don't have third-party candidates that are really helping, divide things further. So there are some important differences between now and 2016. But for sure, it remains possible that there could be another divided outcome between the popular vote and the Electoral College, which is why I think the margin is really the key variable to watch for here. President Trump, of course, would be hoping for another Electoral College led victory, and he does have a path for that remaining, despite the negatives and the headwinds against him in this race. But another difference would be that I think, unlike in 2000, for example, Bush Gore, I don't think Democrats will roll over quite so easily as they did that time.
Tina, 4 years later, is the polling better this time around?
Well, this is what my pollster friends assure me. I'm not a pollster or an election forecaster myself. Pollsters really took a beating when, in fact, to be fair to them, they were pretty accurate in the national polling, right? Because Hillary Clinton did win on that front. It was the Electoral College polling, and it was specifically white, non-college educated men who were under the radar screen. This time, if anything, I suspect pollsters will have overcompensated for this error. And it's hard to think of a kind of hidden pocket of people, cohort of people that could appear that haven't been factored in. And then, of course, we have the phenomenon of what looks like historically huge turnout.
Tina, great to catch up. Appreciate your time this morning. Thank you. Tina Fordham there, Avonhurst Advisory Services Head of Global Political Strategy. Tom, we've gone over this a few times. I think it's worth going over again. The polls back in 2016 and the failure, or at least that was the word that was used at the time. The lead of Hillary Clinton on Election Day, 3 points, in and around. And the popular vote, the final popular vote, the lead was about 2 points. This time around, the lead is about 8 points at the moment, the average of polls, depending on which one you look at, Tom. And I think Lisa has made the point as well. If polls are wrong 4 years later, this time, Tom, that is a total failure for this industry in a huge, huge way.
Yeah, there's no question if they do it back to back. Yes, it's a problem. There's polls that were successful. Trafalgar gets a lot of ink for being successful in 2016. But, John, I would just go to simply the idea the pollsters can't reach a huge body of America, and the word is shy now, whatever that means, but that are just unpollable. That's really what we're talking about with the polling technology. It's just not there to reach out and grasp those people. As you see, is the president like in 40 of the 50 states today? I mean, he's making the circuit looking for those unreachable.
Can you imagine Tom Keane doing the phone interview when the pollster calls up? Trying to work out.
Good luck to
Never
that.
happened. That'd be interesting.
Let me tell you what
Tots.
happened 50 years ago. Yeah, tots.
Roses.
Getting a drink. Hold on. Hold on, I'm getting a drink. Hold on. Hold on.
Let's talk.
The poll was incomplete. It was meant to go on for 2 more days because we called.
Jacinda Ardern's Labour Party holding 64 seats in the 120-seat parliament. Now, that is interesting because it's the first time since the introduction of proportional representation in 1996 that any party has won enough seats to govern on its own. Now, this is by turns rather luxurious and also slightly terrifying for the new Labour government because there are no checks and balances on power. There is no upper house. Jacinda Ardern can pretty much rule as she sees fit. So she did rule out, heading into this election, any capital gains tax, but as revenue collapses, it must be very tempting to give that policy another look. She's also contemplating going into coalition with the Greens Party, even though she doesn't actually need them to govern. Now, the Greens Party did take forward a more comprehensive package of tax reforms to this election. So were she to govern in concert with the Greens, they could do much of the heavy lifting on tax reform, which may also prove to be a little unpopular with some portions of the electorate. So it's going to be very interesting to watch this new turn. There's going to be a lot of new and untested MPs in the caucus. So a second Jacinda Ardern term is going to be full of all sorts of different challenges to the ones that characterized the first.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It is Tuesday morning. Good morning to you all. Alongside Tom Keane and Lisa Abramovich, I'm Jonathan Ferro. We are live on Bloomberg TV and radio. This is Bloomberg Surveillance. Equity futures up 11, just rolling over a little bit. Still positive on the day this morning, up by about 1/3 of 1%. Some economic data in America means one thing. Michael McKee's back with us this morning. Good morning, Mike.
Good morning to you, John. And we're seeing the numbers for durable goods orders come in right now, up 1.9% on the month. That is an improvement over the 0.5% in August. These are September numbers, so they will figure in the third quarter GDP that we will get later in the week. Capital goods orders, non-defense, ex-aircraft, that's the one that economists watch because it sort of tells you what's going into the GDP numbers from the business side. Business spending up 1% on the month. That's down from the 1.9% we saw in August. It is double what was forecast, however. And the capital goods shipments up 0.3%. And that's important because it tells us something about how the economy was going during that third quarter. And it is not as good in September as it had been. In August, we saw capital goods shipments up 1.5%. Let me quickly scroll down here to the actual breakdown of the numbers, and what we're looking at here in terms of unfilled orders down at this point by 0.2%. The biggest movers appear to be in shipments down 1.1%. Machinery shipments down 1.1%. So slowing economy, it kind of continues with the story that we have been telling about the economy since the stimulus ended at the end of July.
Yeah. Mike, you take the 3-month moving average of, I'm going to go ex-Boeing, as you do there correctly. And the fact is the moving averages are moving up a little bit. Move up as we are, or do you say it is an economy when you look at the actual series?
Well, it's almost impossible to say exactly where we're going with this one. You can't say, based on the data that we've seen, that we have slowed down some. You look at the capital goods orders, non-defense, ex-aircraft. Prior month, in August, they were revised up to 2.1% from the 1.9%. So this is a big fall off, 1%. They'll be revised again when we get the factory orders numbers. But you do see a fall off here, a slowing of orders. They're very volatile. It's not the best report in the world, but it does track what we're seeing.
Michael McKee, what is the trend right now?
Well, somewhere between 29 and 35% gain for the quarter. The Bloomberg consensus is 29%. The Atlanta Fed GDP now number 35%. So somewhere in that range is the general consensus of people in the markets that we will get a snapback. It will still leave us short of where we were in January before the pandemic started, but it will be a big gain for the third quarter.
Michael McKee, thank you so much. And, you know, not a statistic that moves the market and all that. Futures up 12, Dow futures up 71 here, and again, a bit distant, an hour distant. I should point out Thursday we'll get claims. To me, that's still an important idea. John, I think that song was A Dozen Roses. I'm not sure, but what was that?
Someone was calling. I've got to turn it off. I imagine that I'm going to get in trouble after this. I'll make sure it's muted, Tom.
I think
it was the florist. It was the florist.
The florist called.
Unhappy
you
about.
You were on hold.
Unhappy about. Just checking the number. It was the florist. Unhappy about what I had to say about their delivery last time around. So
yeah,
there we are.
He wanted to let you know that it was perfect and that he gave you a dozen more.
Perfect. Yeah, I know. Yeah.
Surveillance correction. All right, carry on.
Last Valentine's Day, Lisa got a dozen from Harry Styles. We will move on right now. Michael McKee, thank you for that, given all the noise. Futures up 12. Stephen Stanley with us with Amherst Pierpont. He has been wonderful, granular about this American economy. Stephen, let's recalibrate right now. What's growth guesstimate for the Q4? What's your growth guesstimate for the first quarter?
Well, I'm above consensus, probably not a huge surprise to you. For Q4, I think that the consumer continues to have pretty good momentum, even with the absence of another stimulus package. So I've got about 8% for Q4, which puts me maybe close to double the consensus at this point. And then I think it continues to tail off as we move into next year, still above trend, but maybe 4 to 5% first half of next year.
Stephen, the mystery of holiday spending. I was reading a story this morning about how much uncertainty there is, and it seems like economists are playing psychologists. They're going out and they're saying people are going to need retail therapy. What's your view on holiday sales and how good or bad they might be?
Yeah, well, I mean, I think there's two things to keep in mind here. The first one is that the holiday season is predominantly a goods event rather than a services event. I mean, some people do give, gift certificates for services, for example, for gifts, but for the most part, people are buying stuff. And the demand for goods has been very strong because people can't spend as much on a lot of the services that they would typically be buying. So that bodes well. And I think the other piece of it is that the income numbers suggest, at least through August, and we'll get September income numbers on Friday, that savings rates are high. People have plenty of wherewithal to spend, and that is not true for every household. But in the aggregate, household finances are in very good shape. So I think there's a good case to be made that the holiday season should be pretty good. And certainly, if we were to get some sort of fiscal stimulus, particularly if it included another round of rebate checks before the end of the year, then that would just add more fuel to the fire.
So, Stephen, people are buying stuff, and you can see in some of the fluctuations in durable goods orders, there have been some difficulties fulfilling all of the demand over the pandemic. And heading into the winter, we are expecting the potential for more supply disruptions based on factories possibly having to shut down or people getting sick. How much are you looking for that, or is that a concern of yours?
It's not a major concern. I mean, it's certainly going to be an issue. I think, retailers have been scrambling to replenish their shelves, and we've seen tremendous numbers in terms of imports over the last couple of months of consumer goods, whether it's, the transportation stuff, the ports and the railroads and the trucking companies. I mean, everybody is right now is scrambling to get stuff in place for the Christmas season. So if, I think if there are disruptions, it's going to mean that shoppers are probably going to want to get out early and get what they want before.
Stephen Stanley there of Amherst Pierpont. I think we might have a little bit of a disruption on the line. Stephen, my apologies. We're going to let you go. Stephen, thank you very much.
Stephen,
so on the relationship between the economic data and the increase in cases, I think that's a relationship we need to spend a little bit more time on. Has that correlation loosened up just a little bit? It was tight earlier this spring. How loose is it now, particularly in the United States? Because in Europe, we have that increase in cases, but there's a more easier read across now for economists because we have the restrictions going back on the economy. I think for the United States, it's a little bit different. Without the restrictions, but with the cases increasing, what does that mean for growth? Do consumers disengage? Do companies pull back? The read on the United States I find a little bit harder compared to Europe right now, which is much more straightforward. It's a struggle. What happens with America in the next couple of months?
I'll go with that, John. The mathematics of this, just a simple virology, and the mathematics of what the experts talk about is fancy differential equations. Forget about that mumbo jumbo. All you need to know, John, you're right. The case calculus is different country to country. What I would note, John, in the last week is the death count is moving up. Not nearly like the cases, but nevertheless, the deaths are lifting up a little bit. To the people that are saying, don't stress about this, open the economy, that does give pause in the last week.
Tom, you mentioned ICU capacity in some places in Texas, for instance, as well.
El Paso,
and I think that's a struggle.
on the border,
Yeah,
Marty
getting
Robbins.
a lot of attention. Lisa, you read more research than anybody I know. What are people actually saying on this topic at the moment?
The difficulty of gaming it out, the idea that you have some people saying this is a real concern. And why I brought up the supply disruption aspect is because it's one reason why people think that we could see more food inflation heading into year end, and how this could be a real issue, particularly for poorer areas that can't afford to buy food. And you're starting to see concerns about that being raised in multiple factors. Look, John, to your point, there is a question of what about people just simply disregarding the fact that they're getting the virus and going about their business. But you are seeing business activity slow dramatically in some of these areas without any restrictions, but because people are getting sick and realizing that. So, John, there is a direct correlation. Whether it has actually been priced into the market, a lot of people are saying it has not, because people are simply looking past that and looking for the vaccine.
And also where you see it, manufacturing, not so much, services, absolutely. And that's been captured almost perfectly in the PMIs across Europe, Tom.
I'm so glad you bring this up, both of you, because David Rosenberg was brilliant this morning on this. I actually took a screen grab and put it out on Twitter. The service sector inflation dynamic, John, is absolutely original. All you need to know is services sustain near 3% inflation, and that disinflation has dropped like a rock. Now, granted, goods inflation inflation has come back, and that's the inflation fear that we heard from Mr. Waters earlier, Chris Waters of Longview. But Rosenberg was heated about the service sector disinflation staying here, John, with the reduced aggregate demand.
Tom, in a couple of minutes, I walk away. I know we've got a big week for tech earnings.
Well, you know,
as well.
it's their 2-hour
What
day.
are you looking for this week? Thursday after the close, Tom, is going to be absolutely huge. October 29th, when we get those earnings. I think Microsoft after the close, Lisa mentioned that earlier this morning.
Yeah.
Amazon, Apple, Facebook, others as well, Thursday after the close.
I read every word from Jim Suva, Citigroup, on Apple yesterday. I read every word of Joe Feldman over at Telsey on Amazon today. They're both bulls, and there's a lot of people that are negative. Doug Cass, I know, is pretty grim on some of those outlooks. John, I look at it and I go, it's almost Peter Lynch 101. I'm just trying to observe. The only store busy on Madison Avenue is Apple. That's a fact.
Yeah.
And I look at Amazon, I watch these guys. You talk about essential workers. The guys with the carts, and the women, I should point out as well, bringing us 45, 80 boxes in a downpour or a fragile rain on a cart with a strap around it, and they do it, and they get them there, and I watch them. They actually put the boxes down gently, which pressed the hell out of me. There's double the boxes there were X number of months ago. That's a fact.
Are you monitoring the deliveries of Amazon boxes? Lisa, just a final word on this. How the market has responded to earnings from Europe, from the United States. If you cut guidance, you get punished.
Yeah.
Big time.
Sarah Podzak actually put out a statistic of Bloomberg recently saying that it was the biggest punishment in equity markets for disappointing, for missing. So you can expect a fierce response for big tech.
Yeah, John, I'm sitting in the lobby as cocktail hour. I got a martini in my coffee cup.
I get it.
And vet bills sitting on my lap. That's security analysis.
There's music, Tom.
I lived in the same building. I've walked through that lobby. I have seen it. Everyone thinks he's joking. I've seen it. Mr. Ferro, welcome back. I'll be like, guys, good to see you. Coming up on the Open, UBS Global Wealth Management, CIO of American Wealth, Salita Marcelli. Looking forward to that. From London and New York, this is Bloomberg.
With the First Word News, I'm Rishika Gupta. It's a big win for President Trump and congressional Republicans in the final week of the election campaign. The Senate confirmed Amy Coney Barrett to be the newest justice on the Supreme Court. That solidifies a 6-3 conservative majority. Barrett may be asked to weigh in on cases that could determine the outcome of a close election. The paused clinical trial of an Eli Lilly experimental antibody therapy won't resume. Federal researchers concluded the drug probably wouldn't help hospitalized coronavirus patients with advanced cases. Still, other trials are ongoing to see if the Lilly drug helps patients earlier in the disease's course. And the Trump administration has taken another step certain to make China angry. The State Department has signaled its approval for a potential $2.4 billion sale of anti-ship missiles to Taiwan. China and the U.S. are already at odds. Yesterday, Beijing imposed unspecified sanctions on Boeing's defense unit, Lockheed Martin and Raytheon, because of a previously announced arms sale to Taiwan. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
The index that have really lagged behind. I think they're starting to price some type of reopening, but they did get very overbought on a short-term basis. So things like yesterday doesn't surprise me at all that we had a retrenchment a bit.
Mr. Simon of Morgan Stanley there earlier on equities, on the intangibles of the stock market and the bond market. Right now, as we look at Bloomberg Wealth, we look at Ritholtz Wealth, and of course his work for Bloomberg Opinion. 1B Ritholtz joins us right now. Barry, I want to rip up the script, get away from stocks and bonds, and talk about real estate. Barry, you live in the greater New York City area, which you know goes up just to the bottom of the Adirondacks, and that's a good geography as well. But Barry, there is a boom in the forests that you inhabit. Can it sustain? What happens to suburban real estate that all the people like you were buying the day the vaccine comes out?
So, interesting question. Look, you have a very unusual situation that persisted since the great financial crisis ended and became more intense under the pandemic, which is simply a surprisingly limited amount of inventory. In many areas surrounding cities, it's at record lows, because who wants to try and move in these circumstances unless you have to? And at the same time, if you have the ability to not be trapped in a small apartment with a couple of kids all on top of each other, while sharing a lobby and sharing an elevator with people, it's a suboptimal set of circumstances. And rates are as low for mortgages as they've ever been historically. That sets the stage to see a modest exodus out of city centers, but with so little inventory, that's going to send prices skyrocketing, and that's not a sustainable.
And someone like John Miller over at Miller Samuels has been great on this. But then, Barry, I got another trend, which is a Zuckerberg post office across from Madison Square Garden, where Facebook's going in to Moynihan, and you got Lord & Taylor's, I believe it's Amazoning, and on and on. It seems like there's other trends going on besides, the popular one of out to the suburbs.
Yeah, here's a trend for you. Cities have been intellectual capital centers for 1,000 years. I don't see any signs that that trend is going to change. You've seen the ability to disperse your workforce elsewhere. It becomes a badge of, I don't even say honor, but it's prestigious to be able to locate in the center of a city like San Francisco or New York or Chicago or Austin or, New Orleans. Pick your favorite city. That's where all the intellectual and business energy is located.
Barry, if you believe that, and a lot of people do, what's the investment thesis here? I mean, is there a sort of a play to get in at the bottom if you do have faith that things will resurge back to where they were with cities as intellectual capitals?
So it's not, everybody tends to look at things in a binary form, and it's either the best thing or the worst thing. And the real world is a little more complex and a little more nuanced.
You don't say.
You don't say. The thesis that cities are dying and any sort of apartment or office space REITs are terrible kind of parallels what we heard about mall REITs and mall investments just a couple of years ago before the pandemic. And it turns out that we're pretty good at figuring out how to repurpose these things and generate some sort of return. Now, I'm not brave enough to be loading the boat with apartment REITs that are located in urban centers. That's not my specialty, but there are other people who focus on things like that. Look at Jonathan Litt or some of the other folks that run hedge funds specifically to invest in real estate related ventures, and you come up with an investable thesis that is a little complicated, requires a little bit of a paired trade, but there's certainly some dislocations, and that means opportunity.
Meanwhile, we are heading to an election 7 days away, and I was struck by a Slate article talking about how the states that have gotten hit hardest by the pandemic all vote Democratic and are run by Democratic leadership, and talking about how this is complicating some of the stimulus talks. How much do you invest around this election, or do you just sit on your hands until you have some sort of certainty here?
Yeah, by the way, the Slate article is kind of interesting because there the binary set of circumstances are cities with huge tourism businesses have been getting shellacked, and states as well. So I think the top three were Hawaii, Nevada, and New York City. New York obviously has a very diverse economy, but clearly Broadway being shut, the tourism industry shutting down is having a big impact on it. In terms of the investable thesis of the election, I think people misunderstand it, and people made a terrible mistake in 2016 thinking the outcome of the election was a buy-sell decision about risk and equities. Again, a little more nuanced, a little more complicated. It's a sector-by-sector analysis. So, look, you've had President Trump, who is a fan of coal and a fan of carbon-based energy, in office for just about 4 years. Coal has done as poorly as it's ever done. The marketplace has already made a decision on coal long before January 20th, 2017, and oil is doing terribly. Now, look at things like Tesla, look at alternative energy stocks, look at solar stocks. That's kind of a tell. Banks have been going kind of sideways. They're not doing spectacular. Yeah. I don't know if that's a regulation or a capital requirements trade. And when you look around elsewhere, we're going to see some more regulations, some more upper end tax increases if Biden wins and the Democrats take the Senate. But it's really sector by sector, not risk on, risk off.
Barry, thank you for the brief. Barry Ritholtz with us. I really can't say enough about his work for Bloomberg Opinion. Also, he has a podcast out of note, to say the least, I should say. Lisa, futures, I guess it's a bounce, but I don't see too much of a bounciness off what we saw yesterday. The uncertainty is great.
Yeah, and I think that there's interesting uncertainty right now, considering the fact that there wasn't much last week. People seemed pretty confident with this sort of blue wave thesis, not only that there would be one, but what the ramifications in the market would be, that it would be risk on. There seems to be a hesitation here, people nervous about that conviction. And you can see that in the demand for bonds, despite the record sales this week.
Yeah, there's no question about that. And you see in the social, like if you're watching a Twitter feed, folks, like I have, it's literally about every 3 minutes somebody else has a new poll, a new take out as well. Lisa, I've got to go to claims on Thursday. I think once again, maybe we'll get an improving number into the 700,000 level. But we really haven't said enough about GDP numbers coming up. as well. The state of the American economy into the election will be easy to look at starting on Thursday.
The economy has done better than people expect, but the jobless claims, I really feel like the story here is the increase in permanent joblessness. How much of a setback is this for the economy? People say, we were talking about how the vaccine will solve all. There is this issue of a much bigger permanently unemployed population. What do you do with that?
Well, futures up 6 and the VIX 32.42. I would note West Texas Intermediate 38.67, which means Lisa's $47 a barrel large on those 2 oil drums she's got in the living room when she loaded the boat there with negative price. You nailed it.
Nailed it.
Gold unched at 19.06. Much more to come. Jeffrey Curry coming up with Goldman Sachs. Good morning. I'm Bloomberg Radio. I'm Bloomberg Television.
What would you say that the CDC or the FDA or the White House or HHS should have done differently?
Almost all of us have underestimated the dramatic impact of this outbreak.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the Open starts right now, 30 minutes away from the opening bell, with equity futures rolling over a little bit here, well off session highs, still positive by 5-6 points, up a little more than 0.1%. That's the price action. We begin with the big issue. Presidential candidates making their closing arguments with just 1 week until the election.
You can't let the Democrats and Joe Biden have a far-left victory.
Donald Trump is the worst possible president.
This has to be a thundering defeat, not just a defeat.
The worst possible person to try to lead us through this pandemic.
It has to be a rebuke of socialism.
He either doesn't have any idea what to do, or he just doesn't care.
Both candidates gearing up for a frantic final week of campaigning. President Donald Trump planning to visit 5 states over the next 48 hours, including Michigan, Wisconsin, Nebraska, Arizona, and Nevada. Former Vice President Joe Biden picking up the pace as well, hitting key battleground states, including Iowa, Florida, Wisconsin, and Georgia. The president hoping for a second poll-defying victory, entering the home stretch and trailing by 8 points in the national polls. For more, let's bring in Kevin Cirilli, Bloomberg Chief Washington Correspondent. Kevin, it's almost over. Maybe. We'll deal with the maybe in just a moment. 7 days to go. Where's the focus this morning, Kevin?
3 things. First and foremost, on those battleground states, where in Florida, as well as North Carolina and Georgia, and increasingly Texas, this is a much closer race than the national poll average, which of course has Democratic presidential nominee Joe Biden leading by 8 to 10 percentage points. And it's why when I talk to sources on the president's re-election campaign, they tell me that they feel this race is much more closer in the Electoral College than it is nationally. It's also why there's this palpable sense of anxiety on Biden's team as they continue to try to race toward Election Day. Secondly, early voting, mail-in voting, on the eyes and on the ears, really, of everyone inside of the nation's capital, with 50 million Americans already having cast their ballot. How that will play, not just on election night, but on the days to follow, really could send a huge calculation and have real impacts in terms of policy implications for the lame duck. And that's the third point here. If this race goes on for a while and we don't have a result, how would they be able to have fiscal negotiations, as one senator put it to me yesterday on Capitol Hill, in the middle of a Supreme Court case or in the middle of states trying to continue to figure out who does that? And very quickly, sticking with policy, Supreme Court pick, economic indicators, all of that in what feels almost like a hurricane in the race up to Election Day.
That third point, though, Kevin, is the issue.
Yeah.
This market right now, 27 minutes out, actually rolling over a little bit, barely positive now, up by 3 points, up 0.1% on the S&P. It's the C word on Capitol Hill, contested, Kevin. What are people saying about it with a week to go?
You know, the mood on Capitol Hill yesterday in the halls of Congress has almost been this eerie sense of calm. For incumbents, they're thankful that they're not up for re-election, to be candid with you. But even for staffers, everything's in a hold. And I get that that's difficult to understand for the business community. But everything in Congress right now is in a hold because they don't know what's coming. They don't know who's going to have political capital or leverage on November 4th or 5th. And Jonathan, they are prepared to have a radical shift of sorts in the days that follow. Momentum could be on the left 1 minute and the right the next, especially in what very likely could be the media wars that follow for momentum as this is being sorted through. And because of that, they're in a pause, they're in a standstill, and they don't know what's going to happen in the lame duck with an economic stimulus.
Kevin, one final question for me before I get back to the markets. On fiscal stimulus, how many people are left on Capitol Hill pretending we could get a deal before the election?
Zero. None.
Simple as that. Not even Speaker Pelosi doing the round saying maybe, possibly, before the weekend?
I would play this tape back if I'm wrong, but I think time's run out. And lame duck is really, I think, where the senior aides are, even in the circles as they lead up. Maybe they would agree at minimum to a principal agreement, but a vote before an election day, I don't, based upon my reporting, see that happening.
My producers are quick, Kevin. They've already clipped it. It's ready to play out. I imagine we won't have to play it. Don't worry about it. Kevin Cirilli, thank you, sir. 26 minutes out from the open. here in New York. Let's get you the price action over in New York. It shapes up as follows, with futures really rolling over in the last couple of moments. We're up by about 1/10%, positive 4 points. The bid back into the bond market, yields head south by a couple of basis points. A nice break of 80 in the last 24 hours, a break of 80 basis points. Your yield right now 0.7843%. And in foreign exchange, very briefly, in the early morning in London, we had a 117 handle on euro dollar, just about 118, a lift there for the euro, a little bit stronger. Euro dollar 118.29. Here's a take from JP Morgan's Jack Manley, expecting election jitters to be short-lived, writing the following: markets more than anything care about having any clear outcome. Not so much what the outcome is, it's the uncertainty spooking investors. So once we know who the winner is, expect things to be fairly calm, as markets will know the president for the next 4 years and Congress for the next 2. Jack joins us now with more. Jack, always appreciate catching up with you, sir, so thanks for giving us the time this morning. Is it that simple, Jack?
I mean, I think ultimately, John, at the end of the day, it is. I mean, we saw sentiment like this a couple of years ago during the trade war. We had all this uncertainty surrounding relations between the United States and China. Good news, bad news, policy changing almost, it seemed, on an hourly or daily basis. It wasn't so much that we got a deal when it came to that U.S.-China relationship. It was more that we knew that we were going to have something to lean back on. It didn't really matter what the content was. And I think the parallels here are pretty strong when it comes to the political environment. We have seen time and time again that markets go up and the economy grows regardless of political regime. And I think that where we stand right now, just around a week leading into the election, there is a lot of anxiety. There are a lot of jitters. But come November 4th, hopefully maybe a little bit longer than that, if it takes longer to determine who becomes president, we will have an idea of what the next 2 to 4 years are going to look like. And I think markets will price accordingly, adjust accordingly, and move forward.
Well, let's say we have a president, but we still have a divided government on November 4th, Jack. For you then, if we don't have a clear path towards the next fiscal stimulus package, do you still retain that optimism, that constructive attitude to risk assets?
As a long-term investor, absolutely I do. I think that the issues surrounding fiscal stimulus are short-lived. They're very acute. I think they're particularly sensitive at the moment, but I don't think they will have long-lasting ramifications. And we do know that Democrats and Republicans, at least on principle, both agree that we need more stimulus. And so even with a mixed government, I think we will probably get more money spent before this pandemic is over. Certainly a lot of folks out of work, a lot of businesses still closed that still do need support from the federal government. But when we get that vaccine, I think that is the light at the end of the tunnel. So many of these problems, I think, begin to go away just from that health perspective, really providing a tailwind for markets.
Jack, if you want to lean cyclical or lean secular, does that depend on the politics? Because from what you're telling me right now, Jack, the politics is almost irrelevant.
I think it depends entirely on the vaccine, John. Honestly, I think that when we consider asset allocation today, I think it's really important to have a pre-vaccine view and a post-vaccine view. The vaccine is the single most important thing out there. It is so much more important than the election, because everything that we're dealing with right now, all the recession that we just came out of, all the joblessness, all the businesses closed, all the anxiety, almost all of that is going to be linked directly to the coronavirus pandemic. Having a vaccine, allowing the world to start to reopen, people getting back to work, that I think is the big catalyst. And so my view between secular and cyclical, I think, is going to change once we get, if not a vaccine, at least a much more clear timetable on when we can expect that vaccine.
Well, Jack, let me ask you this. For every quarter we have to wait for a vaccine, does your post-vaccine trade change at all?
Not particularly, because I think the vaccine itself is the catalyst for all of these turnarounds. You see a vaccine, you're going to start to see growth expectations pick up. You're going to start to see people get back to work because more cyclical industries are finally able to reopen. Those kind of close quarters parts of the economy, things like airlines, things like hotels, like restaurants, just the travel, leisure, hospitality, retail part of things. All these things are going to start to reopen once you get a vaccine, whether that's first quarter or second quarter or third quarter. It doesn't really matter. That itself is the catalyst. And then once you do see the vaccine come in, people get back to work, I think you see growth expectations pick up. You see inflation expectations pick up. The Fed might alter its policy a little bit, take its foot off the gas when it comes to quantitative easing. Long end rates rise. I think all of these things hinging very much on the vaccine. Timing itself isn't so important.
Jack, is that the support for the market as well? Just a final question from me. Is that the vaccine put right now, the support beneath this market? Just this fear of missing out, this emotional bias to remain allocated just because you might miss the big announcement at some point in the next couple of quarters?
I think that's a fair assessment. I mean, we've been looking at what we just went through. So this incredible recession, one of the fastest, most severe bear markets in recent history. It's always important to remember very much this was event-driven. It's not something structural. It's not something cyclical. This happened because of an exogenous force that came in and just threw a wrecking ball into everything. And because this was event-driven, there is a light at the end of the tunnel. And I think investors can take comfort in that. Of course, having very low interest rates would be inherently supportive of risk assets. We've also seen that some of the more secular names like technology have held up actually very well, probably because of the pandemic. But over the long run, remembering that pre-pandemic, the economy was in extraordinarily good shape. The stock market was pretty healthy, and knowing that at some point within a year, we should be back more or less to that point, I think is giving investors a lot of comfort when it comes to being willing to take risk in today's world.
Hey, Jack, good to see you. You look well. Send my best to the team. Jack Manley there of JP Morgan. Equity futures up 8, a bounce off that rollover of the last 10 minutes or so, up about 0.2% from the market desk with your movers. Here's Abigail.
John, well, those futures are rolling over just a little bit, as you've been pointing out, but we still do have outperformance for the NASDAQ 100 futures, up about 0.5%. That has everything to do with deal making within the chip space. Xilinx is absolutely soaring, up 14% on the news that AMD has agreed to buy the chip maker for $35 billion in stock. Now, that's a 25% premium, so the fact that the stock's up just 14% suggests some people think that there could be hiccups there. AMD, even as the acquirer slightly higher, they did put up a strong third quarter. As for some other big movers, we have Caterpillar at this point trading lower. They did beat top and bottom line estimates, but the CEO saying that despite the fact that they're cautiously optimistic, they're not offering guidance better than what they did in 2018, saying this is as good as it gets, but nonetheless not great to not have guidance for 2021. Las Vegas Sands is up about 2%, a Bloomberg exclusive, of course, that the company is in early stages of a sale process. Merck up 1.2%. They beat. They also raised the outlook. Their key cancer drug is doing very well. And then Eli Lilly, they missed third quarter estimates. They've also halted or ended their COVID-19 antibody study, not really helping patients, even though it's not deemed unsafe. And then one of their key drugs, a diabetes drug, missed sales estimates. So that stock is down at this point in the pre-market, John.
Abigail, thank you. Coming up on this programme, virus cases surging throughout Europe with governments running out of options to fight the pandemic. That conversation coming up next with Morgan Stanley's Michael Kushma. From London and New York this morning, good morning on this Tuesday morning. Futures just about positive. This is Bloomberg.
Leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear. Women are given an...
Okay, we close position on euro at 118.28. So as you can see, about a week ago we bought at 118.58, and right now we close at 118.28. Okay. After, when I will calculate the price, the profit, you will see on the screen how much we made from this trade.
The stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women. It's not only the business of women, but men have to be part of it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
understand there's a huge, I think, allure of rushing out with a vaccine. But the other thing we have to remember is when we go too fast, we can also disrupt the ability of clinical trials to occur for even better vaccines down the line. So we've got to strike this balance of making sure that we don't undermine the larger scale effort in our rush to get something out.
The CEO of Novartis with a warning this morning against rushing out a vaccine with new daily cases hitting record highs around the globe. Meanwhile, Chief of Staff Mark Meadows reiterating the administration's commitment to therapeutics over containment while speaking with reporters.
We're going to defeat the virus. We're not going to control it. We will try to contain it as best we can. If you look at full context of what I was talking about is we need to make sure that we have therapeutics and vaccines. We may need to make sure that when people get sick that they have the kind of therapies that the President of the United States has.
A different approach coming out of Europe, with leaders contemplating a return to tighter curbs, with officials running out of other options. For more, let's bring in Bloomberg's Guy Johnson. Guy, you and I have been having this conversation the last couple of days. Restrictions are coming back on, but this time there's some real pushback across Europe, and not within governments, not just within governments, but also in the populace, Guy. Citizens pushing back too.
Absolutely, because the economic effects are now increasingly clear, John. You've only got to look at what is happening in Spain. Youth unemployment data out a little bit earlier on today, now plus 40%. That's a very, very high number, and it's been rising rapidly. So the economic effects of the pandemic now really having a crushing effect on many, many countries around Europe. We've also seen this morning data out from the ECB, from its bank lending survey. That's a quarterly survey. Lending standards are tightening into the corporate sector. That, again, not good news. So the economic effect married with the social effect is producing some of the outcomes that you're talking about, John. What we've seen thus far over the last few weeks has been cases rising rapidly. Now we're starting to see hospitalizations and now deaths rising fairly dramatically as well. UK COVID deaths rising by 53% week on week. So those hospitalizations are picking up. But John, the lockdown light regional strategy does seem to be being called into question as well. And it looks as if certain states around Europe are now increasingly looking at full lockdowns, back to where we were in the spring. And that's only going to reinforce some of the social cohesion breakdown that we've seen thus far. Keep an eye on this story. It's developing pretty rapidly here in Europe. People are pushing back. And as you say, within government, and certainly we're seeing that here in the UK, we are also seeing parliamentarians pushing back. They're asking about what the exit plan is, John. How do we get out of this? Easy to get in, pretty hard to get out.
Well, that's something we've experienced over the last 6 months. Guy Johnson, thank you. Much more coming up with Guy and Alex Steele in about 43 minutes' time on Bloomberg TV. Meanwhile, Morgan Stanley's Michael Kushner discussing the pandemic's impact on fixed income, running the following. No real bargains exist in the bond market. Quality assets have recovered substantially, while COVID-impacted companies, sectors and countries continue to be challenged. The best opportunities are in intermediate quality, more cyclical credits. Consolidation in credit markets is likely in the near term. Michael joins us now. So, Michael, let's talk about that. The companies, the credits, the sectors, the regions that have been left behind. Are you looking for some form of convergence?
Well, I think we will see that over time, but it will depend on the results of the election next week in terms of what type of fiscal support stimulus package we get post-election, whether it's a blue wave, a split government, a continuation of what we have in terms of where that support will occur down the road, in addition to the vaccine and things like that. We know that the goods producing sector of the economy is now stronger, more output today than it was pre-COVID, but the service sector is way, way, way below where it was. And this is true around the world, but particularly in Europe and the US. So we've got any sector which is dependent on interhuman interaction is still struggling, while if you're in the producing things, you're in the tech sector, things are fine.
Well, Michael, by definition, a spread can reconcile more than one way. We don't have to converge with the credits, the sectors left behind coming up to the credits, the sectors that have accelerated and really performed well. It can move the other way. And in Europe right now, if you just look at the services sector versus manufacturing, manufacturing's holding up. We know they can turn the light on and off in a way that the service sector can't through this pandemic. Services is really struggling. Now, Michael, in an economy where we know services dominates, can't you make the argument that manufacturing might have to reconcile to what's happening with services in a region like Europe?
It's a good question. Europe is much more export oriented. The German economy in particular benefits from demand in Asia and the containment of the virus and the pandemic in Asia, and the Chinese economy returning to normal at a fairly rapid pace, if not already there, in the goods producing sector. But absolutely right, that you have situations around the world where any service sector and human interaction sector is in trouble. Look at a country like New Zealand. It's eliminated the virus, but the borders are closed. 20% of the economy or so is tourism related. It's not coming back. It's not. They've closed the borders. The rest of the economy has to adapt to the fact that that part of the economy will not come back anytime soon. And that's
so Michael, build on it. Where do you want to take the cyclical exposure? Where would you take it? I think you've got to be really regionally specific, which is what you're speaking to. Where do you take that cyclical exposure in this market?
In goods producing sectors where demand is likely to remain strong regardless of how long it takes to get back to normal in terms of mobility, and where the service sectors get really impacted, whether it's tourism, leisure, entertainment, dining, all those activities, small businesses which are still struggling, hotels still struggling. It's not clear how long this is going to last. We know the rise in virus cases are causing maybe more anxiety about travel, and that will prolong the misery for those sectors of the economy. Don't know how long that'll take, even once a vaccine is started being distributed. How well it will work, we don't know yet. So I think you stick to sectors that are producing things that people are going to want during this not lockdown, but low mobility period of time. We've seen auto sales be strong. We see a lot of goods producing sectors, other sectors being strong too. And that should stay intact, particularly if you depend on demand from Asia.
Have you been buying auto credits in Europe, Michael?
Well, I would say not really, no. What we've liked are the fallen angels, like some of the U.S. auto manufacturers, as well as the companies which have fallen into the high yield category, but still look like they've got good businesses and at some point could get re-rated back up again.
Is there a bias for China exposure in that trade, Michael?
I would say not really. We're not anti-China, but again, the valuations there in terms of the split between higher quality companies, lower quality companies, we're pretty comfortable with higher quality companies, but still very weaker credits, sort of in the lower high yield sector, and not so much.
Michael, great to catch up. Really appreciate it. Really interesting stuff. Michael Cushman there of Morgan Stanley. Thank you, sir. Coming up on this program, the analyst action you need to know. That'll be next in our morning calls. And later, Steve Orth of Federated Hermes joining us at the opening bell, breaking down a big week for earnings season. This Thursday after the close. Just wow. Apple, Amazon, Facebook, and others as well. We'll give you the look ahead in just a moment. From London and New York, this is Bloomberg. 5 minutes out from the opening bell, equities just about positive. S&P 500 futures up 5, advancing a little more than 1/10%. Let's get you some morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up with Bank of America. Downgrading Waste Management to underperform, 116 price target. The analyst seeing a number of challenges, making a stock vulnerable to a rotation into its peers. Next up, UBS upgrading UPS to a buy, a 214 price target. The analyst seeing attractive upside fueled by rising earnings expectations. That stock is positive by a 1.61%. And your third and final call from JP Morgan, raising its Twitter price target to $52, a neutral rating. The analyst expecting to see a meaningful improvement in advertising revenue when it reports results Thursday, alongside some big tech heavyweights after the bell. Coming up, the focus remaining on tech with the 5 biggest US companies gearing up for earnings this week. That conversation up next with Steve Orth of Federated Hermes. Looking forward to that with the cash open just around the corner this Tuesday morning. Good morning to you all. Worldwide from London and New York with futures positive. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Let's start with the good news. The good news is that you don't have to play fiscal headline roulette on Capitol Hill. The bad news is that you don't have to play fiscal headline roulette on Capitol Hill, which means right now we're not talking about fiscal stimulus. But for many of you, I'm sure, you think we'll pick up that topic again on November 4th. 1 week away from an election, and you hope 1 week and a day away from a result. Equity futures going into the cash open positive. Switch up the board. Over in Europe, equities are down hard for a second day. on some of the major benchmarks on the continent. The euro, though, still firmer. I don't get it. I know much smarter people than me in the FX market that do, but I don't get it. 118.30 on euro dollar, up by 0.2%. Crude bounces back up 0.8%, but the bond market keeps a bid. Yields coming in 2 basis points to 0.7843% on a US 10-year. So that is the cross-asset price action this Tuesday morning. Back to the market desk we go for your movers at the open. Here's Abigail.
John, let's start out with some of the big name movers here on the open, with AIG popping sharply higher, up about 7% on the news that they are finally really breaking apart. They are spinning out their life insurance business along with their retirement plans, plus changes in the C-suite. Investors are liking that at this point. We have 3M at this point also on the move. This after they beat earnings and sales were in line. Expenses grew on the higher demand for both their masks and the respirators. Pfizer is down just a little bit. This after they have halted, they have not released their vaccine study news as quickly as possible. Analysts are saying this is a good thing, that no news right now is good news. So those, is seen as a positive. However, that stock is down 1.7%. So some traders actually wanting that news. As for some other earnings movers, Harley's popping on the turnaround plan. It continues to deliver, in this case, a profit as they're able to demand full pricing here in the U.S. Eli Lilly down after they missed earnings. They have stopped their COVID treatment. It's shown as not really helping folks in the hospital with the virus, and their diabetes drug missed sales estimates. Xilinx, one of the reasons, John, that we do have outperformance for the tech-heavy NASDAQ and the tech sector, being bought out by AMD for $35 billion in an all-stock deal. And then Microsoft up 0.5%. They, of course, report after the bell. Lots of those big tech companies coming, and right now, tech is the best sector for the S&P 500, John.
Abigail, thank you. About 2 minutes into the session, as Abigail points out, tech on top. The S&P 500 basically unchanged at the bottom. A struggle for the cyclical trade this Tuesday morning. Energy, financials, industrials, bottom of the pile. Mega cap tech, though, gearing up for the busiest week of the earnings season, with investors holding out rewards for strong beats. And you get punished if you miss. Here's JP Morgan's Stephen Parker saying markets have set a high bar.
While almost 85% of companies are beating, we're not seeing the positive reaction. Tells me that the analyst estimates are probably still a little bit lagged. We haven't gotten to the right place yet, but markets have set a higher bar than what those consensus numbers might mean.
Let's bring in Bloomberg's Sarah Ponzek. Sarah, you've written extensively about this in the last couple of days. Walk us through it.
Right, John. The markets have set a high bar, an 84% beat right now for S&P 500 companies. And they're not just beating. They're beating by a large margin. At the moment, 13%. That's the number that companies are beating earnings by in aggregate. A 3% beat for revenues. But the market has not seemed to care. You have to take a bigger picture look here. The S&P 500 topped out on October 12th. That was the first day of the first week of earnings season. Right now, you're looking at the S&P 500 since October 13th, down 3.8%. So the market does not care about each company's beat in aggregate. It seems like companies that beat aren't really being rewarded as much as usual. And as you said, companies that miss are just being punished, and they're being punished severely. On average, if you look at companies that have beat earnings expectations this season, a gain of 0.3%. Now, that is less than what we have seen historically. Now, if a company has missed, they have fallen more than 4%, according to Wells Fargo Securities. This is just about double the historical average. That is a very hard miss to fall by. But if you take a sector view, which sectors are coming out on top and which are falling behind? Well, healthcare has been acting the best. Regardless of beat or miss, we have seen a gain of about 3% for healthcare companies in the 24 hours after reporting. Not so much today, as Abigail just walked us through with the likes of Pfizer and Merck, for example. Tech, though, at the bottom of the pack, falling 3% after reporting earnings the 24 hours after. So tech really not acting as that safe haven that they've become in 2020 through the earnings season so far. We'll see if that holds up, especially with Microsoft reporting after the close today, John.
Sarah, thank you. Microsoft after the close, Amazon, Apple, Facebook after the close this coming Thursday. This market turning negative just on the S&P 500, down by 0.06%. The NASDAQ positive just by a little more than 0.1%. Steve Orth of Federated Hermes expecting little impact from earnings until there's clarity elsewhere, saying the following: earnings season has taken a back seat. It's been a bit of a sleeper. The market is buying into our growth to value shift idea, but until we get through the election and get more visibility on the COVID path, we think trading earnings will continue to carry less weight. Steve joins us now over the phone. Steve, you're a good friend of the show, and I appreciate your time this morning, sir. Let's just start on that. Are you looking for a little period of consolidation here, Steve?
Yeah, we are, Jonathan. We've been calling for a 5 to 10% correction here, and you know, part of it is because we think the election is closer than some of the polls suggest, at least close enough to lead to a lot of uncertainty post-election until we get that clarified. And then on top of that, the corona news is getting a little bit worse. That impacts people's outlook for the economy. When you add those three things up, it's really all about the future now, not about the past. We've been through a very sharp recovery. I think most people would look at next year and say, regardless of who wins this election, we're going to get more fiscal stimulus, and we're going to get the more important thing, which is the power of the cyclical recovery, which is going to overwhelm politics. And you got a Fed that's basically got its pedal to the metal. Equity should be, you know, pretty well positioned for next year. But in the near term, there's going to be some uncertainty on some of these key drivers of that future outlook, and we're in the middle of that right now. But when you come out of it, you know, I think we're in pretty good shape. The other issue that the market is grappling with, and you can see this a little bit in the earnings season, is that the growth stocks that have led the way and are probably the place to be for the long haul, despite the fact that they've had a huge run this year. But boy, they've got really tough year-over-year compares next year. A lot of them are part of the stay-at-home trade. That's going to be ending. You can talk about the vaccine coming out this month, next month, or the month after, but it's going to be here, and the stay-at-home trade is going to start to fade. And it's going to hurt the year-over-years, whereas the year-over-years on the more cyclical sectors, I mean, their compares are against zero in many cases. So,
well, Steve, you're the second person to say this morning. I think this is really important. You believe that rotation out of growth and that defensive posture that has led people to allocate huge sums of money to those secular growth themes, you think the rotation out of that is independent of whatever happens in a week's time in D.C.?
Absolutely. People are all focused on politics because, you know, it's so natural to do it right here. But you can examine, there are three different outcomes of this election. One is an all-blue government, heavy taxes, but even heavier spend, so net deficit spending, probably viewed as positive for the economy. If you get a mixed government with either Biden or Trump at top, you're going to get probably an agreement on infrastructure and not much else. And the reality is that the impact of the economic recovery, which has got enormous momentum right now and is coming off of one of the historically weakest periods we've ever seen in the history of the economy, is overwhelming the politics. It often does, but in this case, it dwarfs it. And so I think we're focusing on the wrong ball at the moment, which is easy to do because everyone's, you know, that's all you hear about in the news. But the real thing at work here is the cyclical recovery with a Fed that's in absolutely, God, as you like to say, rates pinned at zero.
Well, Steve, since this is the news, let's focus on the wrong ball just for a moment. Just allow me, please. And it's good for you. Just give me a second. 4 years ago, Steve, I remember going into that election, you and I were talking about this market, and you were bullish the Trump trade when others weren't. You weren't hanging out until the morning of November 4th. You didn't sit there for the months leading up to the election saying, if the president wins, if the president is Donald Trump, therefore the market will collapse 10, 20%. You were focused on the policy and not the man on the campaign trail. So, Steve, I'm interested in your perspective this time around and what you think each permutation actually means and whether you're with the consensus on what they mean, what they think it means at least, on November 4th.
Well, we're at a different time right now. The economy is in a very different place than it was 4 years ago. It was moribund. It was in this very slow, disappointing recovery, and the president was offering a supply-side growth stimulus that we thought would be very positive. We thought the polling for Trump was underpolling his sort of forgotten man base, and that he would probably win Pennsylvania in the election. I'm thinking back to that interview we did back in August at that time. But you know, this time around, it's a little bit different. The polling is probably still underpolling his base, but there's there's a lot of other issues at work here. So I think the election outcome, even for us, is much less certain than it was. And it seems that Biden's lead is bigger than Hillary's. So it's harder to call this for either party in my mind. I do think the underpolling level is high and likely to lead to this outcome. If I had to choose one, the one that I would say is highly likely is that the president looks like he has an electoral college victory night of, and then we're going to start on counting all the mail-in ballots. And if you look at the swing states that are probably most up for grabs, Michigan, Michigan, Minnesota, Wisconsin, those states are going to be counting their mail-ins after election night. Those mail-ins are going to be heavily Democratic, probably. So even if Biden actually prevails, it could look like Trump's ahead. He may yet win, who knows? But all I'm saying is I think there's a decent chance of uncertainty in the near term. To answer your question on the policy outcomes, if you get a blue wave, you're going to have higher taxes. That's not good for the economy necessarily, but you're going to get even higher spending. And people will look at that and say net deficit spending is an additional stimulus on top of the economic recovery underway and cheap money from the Fed. That's market positive. If you look at the status quo, which I think is very positive, you've got more China disputes and things like that the market doesn't like, but you probably got more fiscal spending vis-a-vis a recovery package that you've been looking for some time. That probably comes back in play because obviously we need to do something, especially for all these folks that are still unemployed. So that's probably market positive. And you got the supply side growth story from Trump, which I think the market likes. And if you have a Biden in the lead, you probably got maybe smoother social policy issues and things like that the market would like. And with the Republicans in the Senate, you don't go crazy on taxes. So the market will look at that and say it's positive. I think all three outcomes have some marginal additional positives for a market that's already got a long list of positives.
Steve, thanks for indulging me. I appreciate it. And let's catch up near the election. Steve Orth there of Federated Hermes. Thank you, sir. In your equity market right now, we do turn a little bit lower. The NASDAQ with a lift. Here's Abigail.
John, let's break down that divide between the Dow and the S&P 500 being lower, the NASDAQ being slightly higher, dragging on both the Dow and the S&P 500 the most. 3M shares are on pace for the worst day in more than a month. This after they actually beat sales estimates, but they missed profit estimates, and this having to do with the fact that profits were higher, expenses were higher. Goldman Sachs is lower as yields are down, the yield curve down, that dragging on banks. And then we do have DTE Energy there. They put up a strong quarter. They also have received the blessing from Elliott Management to spin out their midstream business. And UPS popping on the news that they have hired or will be hiring 50,000 seasonal workers by Black Friday to help with holiday shopping. As for that tech-heavy NASDAQ, John, of course, that is all to do with Xilinx popping on the $35 billion takeover from AMD. And we do have Amazon up right now, heading to its best day in about 3 weeks ahead of reporting earnings on Thursday.
Just 2 days away. Abigail, thank you. Coming up, U.S. senators departing D.C., leaving little hope for a pre-election stimulus package. That conversation up next with Salita Marcelli of UBS Global Wealth Management. From London, this is Bloomberg. 17 minutes into the session, equities just slightly negative, down about 2 points on the S&P, negative 0.06%. That's the price action. Here's the politics. Speaker Nancy Pelosi, Treasury Secretary Stephen Mnuchin failing to strike an agreement on a fresh stimulus package, with both sides of the aisle playing the blame game. National Economic Council Director Larry Kudlow saying Democrats keep moving the goalposts.
The differences between the two teams on the assistance package have narrowed, but it seems like the more it narrows, the more conditions come up on the other side. There are still a number of areas in her plan that the president cannot accept.
Speaker Pelosi writing a biting letter to House Democrats saying, quote, 10 days after Secretary Mnuchin declared that he was accepting our testing plan, the administration still refuses to do so. Both sides remaining optimistic despite deteriorating logistics and senators departing for a pre-election break. Michael McKee, Bloomberg's international economics and policy correspondent, joins us now for more. Mike, is this one over yet?
Yeah, this is over. Nobody wants to be the one that gets blamed for walking away, so they say nice things, but there's not going to be any stimulus. Just in terms of the logistics of trying to do a bill between now and Election Day. But what was the point anyway? Election Day is just an artificial deadline. And it does seem that the Wall Street cat has gotten tired of chasing the stimulus laser pointer at this point. We've accepted the idea that we're not going to get anything. You look at the 10-year note yield, and it's been trading in a range, no breakout to 1% at this point. And it's probably not likely until sometime perhaps next week. We have two events coming up that will be dispositive towards the markets. One is on Thursday, GDP. Let's see how big the rebound was from the big drop in the second quarter. The forecast consensus from Bloomberg is for a 33% gain, annualized, of course, in the third quarter after a 31% drop in the second quarter. And of course, next Tuesday, Election Day, reminder, everyone vote. Bond traders don't really want to drive a move until they see what the politics are. We get a blue wave, and that might tell members of Congress that Americans want a stimulus package right now. You look to the lame duck. They have to pass a bill by December 11th to fund the government, could be attached to that. Divided government makes it a different case because you might have some Republicans launching their campaigns in the 2024 presidential election cycle, and they may want to go the austerity route. So a lot depends on any juice from the Capitol.
Mike, thank you. Salita Marcelli joins us now of UBS Wealth Management. Salita, thank you very much for being patient and standing by to catch up with us. We've spoken to two people in the last 50 minutes or so that have said their outlook on markets is independent of what happens in 2 weeks. In a week's time. Is yours?
Well, the election is certainly driving the short-term volatility, but frankly, the medium-term drivers of the market is going to be a fiscal policy, fiscal stimulus, and continued accommodation from central banks, and the introduction of an effective and safe vaccine. So even though the election is perceived as a significant market event by many, and frankly, the election is not inconsequential. Once we have the outcome, regardless of what the outcome is, I think it's going to, the clarity that comes with that is going to be a catalyst for the market to move higher.
So, Salita, I assume you're already allocating to the parts of the market that you think will perform after the event. Walk me through where.
We are very constructive on risk assets because we believe the global recovery will continue. The main reason for that is because regardless of the election outcome, we do expect to see a fiscal stimulus. The question is not whether we're going to get one, it's the size and how broad its reach is going to be. But we do think that the next leg of the rally is going to be driven by the parts of the market that have been lagging, mostly cyclicals. In the United States, that is mostly mid-cap companies, where we see a better growth outlook next year compared to large-cap companies. In Europe, it would be mid-cap and small-cap companies as well. Within emerging markets, our focus is more on the value side of the emerging markets. And, within fixed income, especially for yield seekers, our focus is on emerging market dollar-denominated debt. TIPS is another area that we like. Obviously, the Fed's new framework is very supportive of that. And oil and gold are also going to be supported by the global recovery.
Salita, just a final one from me, if I may. Small caps in Europe sounds really brave on a morning like this morning, given what we're seeing play out across Europe. Why, Salita?
Certainly it looks great, but like I said, we are looking beyond the near-term volatile, not just driven by election, but also rising COVID cases and the fresh new restrictions. It certainly increases the downside risk in terms of what we're seeing around the spread of the virus. But in our base case scenario, we are looking to see a vaccine that would be widely available by the end of the second quarter of next year. We are looking very closely, like a lot of investors, to the results of the phase 3 trials, and what we're going to hear from Pfizer and Moderna over the next 2 weeks, I think is going to be critical. Without a proper vaccine, obviously European small cap will not be a good trade.
Salita, I would love to get you back on the program soon to have a longer conversation about this, because this is a really, really interesting trade given the moment that we're in right now. That was the wonderful Salita Marcelli of UBS. Coming up on the program, your trading diary. This is Bloomberg.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
$25 in, equities up 0.1%, 7 days away from an election, 2 days away from a big earnings day. Coming up later, 1 p.m. Eastern, Joe Biden campaigning in Georgia. President Donald Trump holding another 3 rallies throughout the day. CEOs of Twitter, Facebook, Google testifying on Capitol Hill Wednesday, plus mega-cap tech reporting results on Thursday. We get an ECB rate decision, US GDP, and another round of initial jobless claims coming up later this week as well, through Thursday. From London and New York this morning, good morning. This was the countdown to the open. Thank you very much for choosing Bloomberg TV. For our audience worldwide, you can catch me on Twitter at FerroTV. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from, traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger. And without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.